There's some calls out there about the German 10-year turning positive maybe by year-end, and some pushback in the mix this morning from HSBC reaffirming their target on the German 10-year at negative 50 basis points.
Huge struggle out there. You know, the data check that we try to do through European soccer here, the real yield in the United States, John, a negative 0.82 really gets my attention. This reversal is sustained. We're not quite back to February levels, but we've given back April, and we've given back most of March as well.
Lisa, if we get a move towards zero on a German 10-year yield in the minds of, say, BNP Paribas and others in the mix as well this morning, looking out to year-end, where does that leave a 10-year Treasury?
Yeah, well, that's a question of what else would it disrupt? I mean, how could we get there without any disruption that would cause some kind of flight to safety? And this has sort of been a conundrum for a lot of the bond bears out there, which is, how do you get to zero from negative 50 basis points without everything else selling off?
If you are not in crypto land, it is a quiet start to the week, let me tell you that. Coming up in the next hour, Dan Alpert, Westwood Capital Managing Partner from New York City this morning. Good morning. Alongside a fired-up Tom Keene, Lisa Abramowitz, Jonathan Ferro. Your bond market bid resumes. Yields lower by a couple of basis points at 155.71.
What does Newcastle do?
Your equity market 41.70. Maybe they win the league, Tom. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. A warning for Russia from the Biden administration. The U.S. says there will be consequences if jailed opposition leader Alexei Navalny dies. Navalny's allies say he's in critical condition and may die within days. He survived an alleged assassination attempt and is now in the third week of a hunger strike. Prison authorities say Navalny has been moved to a hospital. In Minneapolis, closing arguments are set for today in the murder trial of Derek Chauvin. He's the white former police officer who is accused of killing a black man, George Floyd. The killing of another black man by police in a Minneapolis suburb has increased anxiety over the potential for violent protests. The CEO of GameStop is stepping down. George Sherman will leave by July the 31st. The company entered the spotlight when the Reddit crowd caused the stock to rally. That created a short squeeze for hedge funds, which had bet against it. China says it has no desire to topple the dollar as the world's main reserve currency. That's as Beijing takes bigger steps in creating its own digital yuan. The deputy governor of the People's Bank of China says it's creating the digital currency for domestic use. And this could be the biggest shakeup in professional soccer in decades. A group of the world's richest soccer clubs are planning a European breakaway league starting in August. Amongst those taking part, Manchester United and Real Madrid. The Super League teams would play each other midweek as an alternative to the prestigious Champions League. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
From New York City, for our audience worldwide, good morning to you all. Alongside Tom Keane, Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action to kick things off this Monday morning. All-time highs at a close through much of last week on the NASDAQ, the S&P 500. 4 straight weeks of gains on the S&P 500. Here's the price action right now. We trim that gain by about 6 points on the S&P to 4170 and down a little more than 1/10%. Thanks for that, Tom.
So predictable.
Yields coming a couple of basis points on 10s to 155.71. Euro dollar, we've got to talk about this through the week. Euro dollar 120.
Yes.
33. We reclaim, Tom, a 120 handle on a euro.
Strong euro 120. You mentioned Goldman Sachs framing out 125. I thought I saw a ton of rationalization and reassessment over the weekend. John, I know we've got to get on here to other topics, but one of our viewers named Micklethwaite, John Micklethwaite, reports from London right now, and he looks at this soccer uproar, this football uproar, is a gambling chip, John. It's a gambling chip. Does this whole thing, John, get solved by Wednesday?
So I think the correct characterization of this would be a threat and not inevitable. An inevitable threat, a conclusion of the last 12 months, and big clubs struggling for money as those stadiums remain largely shut across most of Europe.
Yeah.
But Tom, you're right, the negotiations begin. And I think Lisa was right to point out at the top of the show that UEFA will come out with this new format for the Champions League a little bit later today, and that's what this is going to be about, talks between the big clubs and Europe's elite governing body.
We have one more question before I get to Mr. Schenker. John, is the Champions League bigger than the Premier League? Because I think to most people in America, it's not.
In Europe, for the clubs, for the players, it is the premier club competition, without a doubt. Without a doubt.
Okay. Just because of time, let's get to Martin Schenker. He doesn't give a damn about football. He's watching the Yankees lose this weekend. Red Sox mix. Padres were exciting. Dodgers-Padres was like real baseball this weekend. The infrastructure bill comes in. The Republicans are starting to get to a workable number. Is there a legitimate negotiation, or is Mr. Biden saying my way or the highway?
No, there is a legitimate negotiation underway, but it's a small bore considering in the context of the $2.3 trillion plan. So we could get some Republicans to come along on a small segment of infrastructure, but not the whole deal.
Are we where we were with Senator Byrd of West Virginia years ago, where every congressman got their highway to nowhere?
Well, the earmarks proposal is coming to a decision this week, probably. And I think we are very much back to those days where, the bridge to nowhere happens in order to get this infrastructure bill through.
Marty, does the $800 billion proposal from some Republicans saying that they could get some sort of infrastructure plan through, does that include highways to nowhere, or is that pretty much a nuts and bolts, fix the roads?
No, it does include the earmarks plan. And so I do think it's a real possibility that we may get the kind of bipartisan segment of infrastructure that actually the last 4 or 5 presidents weren't able to do. So kudos to Biden on that.
Although there is a question here of whether that basically torpedoes the rest of his agenda because he can't get the rest through. What is the Democratic pushback in going for some sort of pared back infrastructure plan, taking out the carrot, and then having all of the Democratic agenda left to be established?
Well, you know, this is a very delicate balance, as you suggest, for Biden to get his proposal through without undermining his overall vision. And he's doing that on a number of issues, on immigration, on climate. He's trying to thread that needle with the progressives and the more moderates and the Republicans. And so far, he seems to be doing a fairly decent job of that.
Marty, I want you to give us perspective, and particularly our global audience, on this repeated violence across America. It's riveted Washington now, and there's any number of ways to go here. But the bigger concern is across all politics, people are saying, do something. Is it just we've given up with the idea we can do something?
Well, you know, Tom, all the polling shows that the American people support more background checks on guns and just a more rational approach to weapons in America. And you simply cannot get it through the Republican Senate. The Republicans in the Senate.
This is singularly about the Republican Senate sitting at equal or even with minority with the vice president.
That's the bottom line. And until you can get past that ideological barrier, you're never going to get the kind of action that the public seems to really want.
Just to complete the Around the World with Marty Schenker this morning, Marty, I do want to go to the international effort that we've seen by President Biden. It's been all about foreign policy for the last week or so, and now the talks are shifting to climate. How much can the U.S. lead at a time when people are wondering whether the U.S. still has that role post-Trump?
Well, that's, you know, the bottom line. We've written stories about it. Whether or not the rest of the world can trust the U.S.'s stance on climate after Donald Trump, and whether that was just an aberration in history or whether it means that you cannot rely on the U.S. is the fundamental question. And we're going to find out a lot about that this week at the Climate Summit.
Marty, always good to catch up with you. We'll avoid the football talk. I'm sure you're happy about that. Marty Schenker there.
How about a Super League in baseball?
Hey, there we go.
This is Riley, bring up the banner. The equivalent to this, you got me going. It's your fault.
Oh, yeah.
The equivalent to this in the morning, can you imagine the Yankees, the Red Sox, the Dodgers, and the Cubs, and say 2 other teams I can't remember, saying, look, I mean,
it's the NFL, it's the major leagues that's inspired this. For much of Europe. It inspired this.
I will say this, and Riley, give me an Orioles banner as you can as well. Pre-made here, you can't do this and not have the Orioles of the late 60s, the 70s, and into the 1980s.
I have a question.
The Oriole way was a culture. It was a code of conduct, John Farrow, and the Oriole ways of Cal Ripken Sr. would never have happened under this structure.
I feel like I should light a fire.
Yeah.
Get the marshmallows out or something.
I think you already have. John, I have a question. Will fans boycott if there is this Super League?
So the fans have started to push back against their clubs around this. And Lisa, I wonder, at the end of the day, are they really going to push back and stop watching their club? I don't know. We'll find out. And I think Matt Miller earlier on this morning said it right. You know, eyeballs will matter here. Where the eyeballs go will ultimately dictate things, because that's where the money will go. That's where the TV money will go, and bottom line,
so you think,
that's going to be
John,
the most important
Liverpool
thing.
fans worldwide, owned by the Americans, will rally to watch a fixed 15-team league where Liverpool can never be relegated?
I think that the fans will still watch their beloved football clubs, yes, if that's what you're asking me. I do. But that's just my view. What's that worth this morning? Everyone's got one on this.
That's true. Would you like to weigh in, Mr. Schenker?
I'm going to watch Liverpool no matter what.
There you go.
Literally everyone has a view. Even I've been weighing in on football, John. You know things have gone off the rails.
Coming up next, Michael Spence. Can't wait to hear what the Nobel laureate's got to say on this. And General Atlantic
I got a window
senior
over here next to me. Ira Jersey's pounding on the window saying, can I get in on this
6:25 Eastern. I
conversation?
often forget this because we've been up for hours. If you are still in bed, stay there, maybe. In the bond market, yields are coming in a couple of basis points to 156. In the FX market, euro dollar 120.33.
Ryan Mason looks good for me for
Euro
the tots.
stronger by 0.4% in the equity market. We're coming at 41.69. Does he want to do sport? Does he want to do markets?
Same
Where
thing.
is he at,
Keep
Lisa?
going.
Yeah, same but different.
Yeah.
Equities, all-time highs. We pull back a little bit. From New York City for our audience worldwide, it's a beautiful one in New York. Once again, this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City for our audience worldwide, good morning to you all, live on Bloomberg Television alongside Tom Keane, Lisa Bravitz. I'm Jonathan Ferro. desensitized by all-time highs. In your equity market, we pulled back just a little bit from those record highs. On the S&P 500, 4170, and down around about 6 points and off by 0.1%. Similar story in the NASDAQ here. No real drama in the equity market. If we switch up the board into the bond market, this is what we look like on 2s, 10s, and 30s. Story of last week on 10s. Yields coming in by about 8 basis points, despite the fact we had better than expected retail sales, despite the fact we had higher than anticipated inflation. Your yield right now, 156 and down 2 basis points from 174 at the end of March. Let's finish on this one, euro dollar. Just briefly, Tom. Euro dollar through 120 again, 120.32, and up by about 0.4%. That right there is a stronger euro, and we capitulate and we move on some of the calls over at Goldman. Goldman now looking for 125 over the next 3 months from 121 previously. Is this the European capitulation, Tom, starting to kick back in?
Well, our weak dollar across the board, DXY 91.14, a breach there of 90 would be a huge deal. Right now on an odd Monday, as we look at sport around there, the sport of economics is led by Michael Spence, the laureate and founder of education quality at Stanford University, and of course, General Atlantic Senior Advisor, Professor Spence. Thrilled to have you with us this morning. Michael Spence, we see a White House looking at wages. We see a White House looking for wage lift. And one of the great thinkings, including what we saw from Jamie Dimon's letter, was the ability to get wage growth in America. How do you get wage growth given technology? And how do you get wage growth given the concentration of wages like Amazon and like others, which you guys call monopsony?
Right. Well, it's a complicated challenge, but I think, there are a number of things that are important. You have the tax system, which isn't directly wages, but affect incomes. Second, you need to strengthen the institutions that, support unions and change the bargaining power. And that's especially important when you have big monopsony sort of buying power. And third, you have to deal with this skills challenge that we face. I mean, wages are going to reflect the value of various kinds of labor in the marketplace, regardless of these changes in sort of bargaining power. And we know that as our economy transforms digitally, that we need a new set of skills, and we need institutions, public and private, that help us get that done, Tom.
Professor, off of your wonderful book, The Next Convergence of a Decade Ago, what is the next labor convergence? Do you perceive globally, as you write with Stiglitz and others about a K-shaped economy, do you see any power for labor to reaffirm what we see in our nostalgia?
Yes, I do, actually. I think we're in for, a couple of things. One is a very powerful recovery that's underway in America, and I think will come with a slight lag here in Europe. Second, we have, productivity enhancing technology that's ready for prime time. And third, we have governments that have decided that they need to use their fiscal power to make sure that the demand side of the market, and particularly the employment side, is good. So if we convince, a sufficiently large part of the economy to engage in this process of innovation, I think we could have an employment and productivity boom and a real change in the dynamics that we've been seeing for the last couple of decades.
Michael, does a minimum wage gap, or the idea here of some sort of minimum wage that's higher than where it is now, lead to higher wages, fewer jobs, or both?
Well, this is controversial within the economics profession. So, and you'll get views on all sides, sometimes politically motivated and sometimes just because people reach different conclusions, Lisa. But bottom line is minimum wages probably don't cost us much employment. They affect the incomes at the lower end of the income spectrum, but they don't actually have much of an effect on, this challenge we face in sort of raising middle incomes relative to the sort of the top 20%. So it's an important tool. I think we should use it to the extent our political system allows us, but it's only part of the solution.
And I ask because, Tom asked the right question to start this out with, which is the technological innovation that's going to leave a lot of people without the skills, without perhaps a role in the labor market the way that they once did. And certainly if they have a role, it'll be at a much lower rate. What do we do with those people? I'm not saying it's a lot of people. We all have people in our circles who belong there. And their question is, do you do a training? Do you have some sort of universal income? What's your view?
I think you use all the available weapons, Lisa. So, I'm not sure which version of a universal basic income, will finally emerge. But I think we have to put a floor and just not tolerate a situation in which we have poor people. But I think we need an all hands on deck, led by government, but with engagement from business and education to tackle the skills transitions that we need as well. So this challenge is so important to the kind of cohesiveness of our society that I think it's an all hands on deck. You use all the instruments you've got to try to deal with it. We have to reverse these trends.
Michael Spence, in the time that we've got left with you, I think we must turn to your focus over the last decade on China. There's a lot of fears out there. I'm going to say there's some misinformation, but what I mostly note is a careful, considered study of the axis between Beijing and Washington. How much power does Beijing have?
Well, they have a lot of power now because they have a big, thriving economy. It's recovering quickly. It's technologically and in other ways dynamic. I mean, in every country, including China, if they make some big policy mistakes, they could screw it up. But on balance, they have an enormous amount of power that stems from primarily their big domestic market, which people want to have access to as investors and as in terms of trade. So they're powerful, and we have to deal with them as a powerful potential trading and investment partner and competitor.
I look, Michael, at China, and I look at Hong Kong and how it's changed. What would you recommend if you were consulting to the major Western banks on Hong Kong? Should they sustain in Hong Kong or take a different strategy?
No, I think that, they will, I would recommend that they try to hang in there and comply with the laws. But I mean, Bill Wrench made some very interesting remarks, I think, in reporting to Congress. He basically said, we're approaching, a kind of slow motion train wreck in which the major multinationals, including the banks, are going to find themselves straddling borders and one way or another, not in compliance with the laws and regulations of where they sit. Either way they go. So I think they need to be aware of that and the risks that are associated with that. But I wouldn't recommend a precipitous withdrawal at this point.
Michael, stay close. I just want to summarize a piece coming out of the White House right now about the labor market and average wages. Tom, you might find this interesting. A couple of weeks ago, we had Jared Bernstein put out a piece on the base effects ahead of the inflation report. And Cecilia Rouse, the chairman of the Council of Economic Advisors over at the White House, has put out a piece just on average wages. Really, really intuitive. I think easy to understand for people with an economics background, perhaps counterintuitive for other people looking at what happened last year, April 2020. Because of compositional effects in the labor market, we had a lot of the low earners drop out of the labor force, and wages actually surged at a time of immense weakness in the economy. And I think what they're preparing people for, Tom, is just to indicate when that labor composition shifts the other way, you could get negative wage growth in the United States of America, and essentially concluding it's nothing to worry about. So we've had a Jared Bernstein piece a couple of weeks ago ahead of an inflation print, preparing everyone to say this is just base effects. And now we have a Cecilia Rouse piece coming out from the White House in a blog, basically preparing people for weaker wages because of compositional effects. Michael, if I can bring you back in just quickly, the economy is going to be pretty complex and nuanced in 2021. This seems to be a big effort from the White House to help everybody understand the signaling that we should take or maybe shouldn't take from economic data. How important do you think that is for this year, just in terms of how we respond, react on Main Street to things like headline inflation, economic data every single month?
Well, I think it's very important. I mean, the narrative really matters, and they're right. if we get a major recovery in the shutdown sectors, that we've talked about many times before, which tend to employ the lower end of the wage spectrum folks, if they come back into the labor market or are just reemployed, then you could get something that looks like a bad signal from the point of view of an administration that is essentially said one of their high priorities is dealing with A, employment, and B, a fairer set of outcomes in terms of, so they want the recovery, but they don't want people to misinterpret the signals that are coming out of the prices in the labor market or elsewhere in the economy. So I think it's really important.
Michael, it's good to catch up, especially to get a final thought on that, because I agree with you. I think it's important too. Michael Spence there on the latest in this economy worldwide and the domestic story in America too. Tom, this is an effort to control the narrative. And that narrative needs to be controlled for economic purposes, one, but also for political purposes, too. And I think Michael just touched on that at the end there.
The measurement, John, that we use is ECI. There's any number of ways to look at wages. I look at the Employment Cost Index, which takes benefits and wages both into account. And it's nowhere near a worry of wage inflation. Sort of there's a 2-ish% per year, John, and there's a 3-ish% per year. And are we going to get up above a 3% per year? That's not visible at this time.
What do you make of the outreach, Lisa, in the last month? It's a change of approach.
It's a threading of the needle that is a very delicate needle to thread. This idea that they want to both encourage people to take structural action to improve the wage dynamic for the lower income individuals, while also saying the Biden administration is running a very well-run government that is getting the economy recovering.
We got to talk about this pandemic as well. Tom, I know you want to fit something in.
I just was going to say the tots are threading the needle this morning.
They are.
It's
in many ways.
I'm sorry, the tots are threading the needle.
To be a Spurs fan this morning. Coming up, Joshua Shelfstein, Johns Hopkins Bloomberg School of Health Vice Dean. Your equity market pulling back from all-time highs, down 0.2%. Yields in a single basis point, 157 or 10s. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden wants to prove to the world this week that the U.S. has rejoined the fight against climate change. He'll promise cuts in greenhouse gas emissions that are both ambitious and achievable. But after policy reversals and years of inaction, the U.S. will have a wide credibility gap to overcome. An international climate summit begins this Thursday. A case at the U.S. Supreme Court today will pit the Biden administration against Democratic lawmakers and progressive allies. The administration will defend the government's policy of blocking permanent residency applications from thousands of immigrants who've been living legally in the U.S. for years. It involves a temporary protected status program for immigrants from countries in crisis. Despite the rollout of vaccines, global coronavirus infections have hit a new weekly record. In the past 7 days, 5.2 million people were infected. That was a 12% increase from the previous week. The worst outbreaks are coming in many countries that aren't equipped to cope with it. And the CEO of video game retailer GameStop is stepping down. George Sherman is ending a tenure marked by persistent slump and failed performance targets. GameStop has become a favorite of Reddit reading traders this year, sending the stock soaring several fold, but the company missed both sales and profit estimates in its most recent quarter reported. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Really busy morning, as you can tell from the last 47 minutes or so on this program. From New York City this morning, good morning, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Does that not translate well still?
Just letting people know.
I've got to explain it.
I will explain it for you.
That was sarcasm.
Yes.
In the equity market, we look like this, pulling back from all-time highs, down 12 on the S&P 500, off by a third of 1%. Yields in last week, yields in again this morning. Tom, we're down a basis point to 156.76 on 10s. And the euro, there it is, euro dollar 120.35.
I'll turn to the markets today, but a real shock from where we were 10 days ago and certainly 2 weeks ago, with a real reaffirmation of the low yield space. Right now in the pandemic, Joshua Sharfstein has provided us with immense and calming wisdom with Johns Hopkins, the Bloomberg School of Public Health. Of course, Mr. Bloomberg with a nodding acquaintance with his television and radio property as well. Dr. Sharfstein, I want to get to the sum of all the fears that are out there. The younger crew are getting vaccinated. Reports are Ms. Abramowitz will find the jab in the coming days. And Mr. Ferro, brave as all get out, showing up for the second jab today. I mean, Dr. Sharfstein, should John take the day off?
Well, I think the first thing is to thank you both for doing it. It's good for you. It's good for everyone. It's really important for people to get vaccinated when they can. I think that it's absolutely true if it's their second shot, that they're more likely to have more symptoms for the next day. So at least to have that as an option tomorrow isn't a bad idea. But the good news is they're going to bounce back really quickly, and they'll be as sharp on the air as ever.
Well, very political of you to say that. I mean, I think the soccer talk will keep John
Dear
here.
Mike, I will be off tomorrow.
I'll be off Wednesday.
The Bloomberg
hold on a second.
Hopkins School.
Just to bring this back on the rails, Dr. Sharfstein, do women have a more severe reaction than men? Just throwing it out there, theoretically.
Good question, Lisa.
You know, that may be the case, but I don't know that for sure. What I would say is that there's a wide range of responses. Some people really just have maybe just a little bit of soreness in their arm. Some people really feel under the weather for a day or so, but then everyone's back and ready to go the next day.
What did you learn over the weekend? What we've seen is a lot of misinformation, different politics folding into all this as well. Dr. Sharfstein, what is the messaging you require right now from professionals? What do they do next to calm this nation?
Well, this is a difficult time here because we're seeing parts of the country with very high rates of transmission and younger people getting sick, the variants taking their toll, hospitals filling up. At the same time, the vaccine effort is really going strong. So, you know, don't declare victory too early. I mean, it's still the same message. This is a difficult situation, and people who are not vaccinated and are going out to places with you know, poor ventilation are very much at risk.
We have to talk about irrational fear as well, though, Joshua. Over the weekend, a poll in the United States got a lot of traction. It was actually a poll that was conducted at the end of last year, and they basically asked people by political party affiliation what percentage of COVID infections actually end up in hospital. And these numbers are incredible. 41% of Democratic voters think that you end up in hospital. 41% of COVID infections end up in hospital. That's the view. Joshua, 50% plus, 41%, that's ridiculous to me. 28% of Republicans believe 50% plus end up in hospital. 50% plus, when the correct answer, as you know, is 1 to 5. So let me go through those numbers again, because I butchered it at the start. 41% of Democrats believe 50% plus of infections end up in hospital. 28% almost of Republicans believe the same thing. Joshua, how did we get here? This irrational fear.
Well, let me just say that I haven't seen that poll, and you have to look at how that's asked. I do find that a little bit high, surprising. But at the same time, I don't think you can look at the United States at this point and say that people are overstating the risks of COVID, you know, generally in how they're acting. I mean, we're seeing huge parts of the country act like COVID doesn't exist at all, and isn't any risk to them at all. And as a result, hospitals are filling up. So on balance right now, I think for at least some parts of the country, we're not taking it seriously enough, and people are really getting sick as a result.
In some cases, though, there seems to be a lack of common sense. And I was walking up the street, I think on Saturday evening, towards a restaurant, and there were people on the outside in the open air, scared of walking past each other with masks on. And I looked into a restaurant, and there were just tables of people without masks on having dinner. Now, I can't really reconcile those two things. The lack of common sense around this issue right now, Joshua, just seems a little bit ridiculous.
Here's what I think is happening. People have two gears. Either it's, you know, an immediate threat and every possible precaution has to be taken, or we're past it and we're good, you know? And we have to find that middle gear. We have to be able to be comfortable outside without wearing a mask. There's really not that much evidence of transmission. And we have to be much more careful indoors. Now, of course, for restaurants, the situation is a little different for people who are vaccinated now. But I think in general, when it comes to these unknown public health threats, people tend to put it in one of two gears, and we just have to find that middle gear to be successful.
Of course, we do have a situation where more than a quarter of all United States residents have been vaccinated, fully vaccinated. 40% have gotten at least one shot, this according to the latest data, and yet we're still seeing case numbers high, people shrugging it off because we're not seeing the hospitalizations and deaths. Is this the new reality? I mean, we're going to see this virus on an ongoing basis, perhaps like the flu, but perhaps it's okay if it doesn't result in hospitalizations and deaths, no?
Well, I mean, look at Michigan. They've got as many hospitalizations basically as they ever had, and the hospitals are canceling elective surgeries. That is starting to move in that direction here in Maryland. So I think if it were just a case of mild infections and people not getting hospitalized, then we'd be in a different world. That is not the world we're in. These variants are more lethal than the other ones. Younger people are getting sick. And I mean, again, I'm not trying to say everybody has to, you know, completely hunker down, but we have to find that middle gear still as the vaccination numbers increase.
Joshua, always enjoy your perspective on this program. You know that. Please come back soon, sir. It's good to hear from you. Joshua Shofstein there of Johns Hopkins Bloomberg School of Public Health. Tom, that's the issue right now. Irrational fear and the lack of fear in these two dynamics, these opposing forces in America that still dominate the conversation.
I take great issue with it, John. I think you're absolutely dead on. We had the honor of interviewing Lisa Sherman of the Ad Council, and I saw their first ad this week out on the tube. And John, it just was not hard-hitting enough. They went for the soft, emotional, touchy-feely silly stuff. And I think we need a major education, both a humility for the elite science crew and also a humility for those scared stiff to move forward on this. But I'm sorry, the news above age 18, John, is unambiguously good.
Well, yes, and this has to do with the vaccinations, but there's this idea of delayed gratification, and I think that this is sort of, again, the needle trying to thread. The idea here that if more people adhere to a safety protocol, to a hygienic protocol, we'll finish this sooner, and there won't be as many variants, John. That is part of the issue.
How you make people adhere to the rules without scaring them, we got to do something about that. It's just ridiculous walking around, seeing people still scared of each other, and then people at the same time in restaurants just getting on with their life.
Right.
I mean, come on, a bit of common sense here, guys.
Welcome
John,
to
the helicopter worked on Mars. The helicopter worked on Mars.
Yeah,
That's
if you've been vaccinated,
news.
I just think, you've got to start enjoying life. You
The
really
helicopter?
The helicopter worked on...
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Is there anything you think the Fed should be able to do to help people who are really suffering in the pandemic?
I think they need to be in the room with us as we make our decisions about monetary policy.
Things
things appear to be too perfect right now, but you're kind of in a Goldilocks period.
Fundamentals will trump here, and fundamentals are going to be incredibly strong over the remainder of this year.
The political establishment today is much more willing, and in fact, in many cases, invites higher inflation.
Everything we follow would suggest every bit of inflation is being passed through and then some.
You're going to see higher inflation, and the Fed's going to be caught by surprise because it's really following the wrong model.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity markets to close out last week at all-time highs. Coming into Monday, we declined by about 9 points, Tom, off by around about 0.2%. It is a no-drama market morning this Monday morning.
It's a no-drama market morning, John, but in the last hour you nailed it where you said it's a European week and Americans have to sit still and wait for Europe to speak here and for Europe to drive forward their conversation. And the news there, John, to me is from what we're hearing from everyone in the financial community and medical is Europe finally with better pandemic information.
The outlook gets better because the vaccinations have improved. And that's really the story here, Tom. I think we've had 8 straight weeks of gains on the Stock 600, 7 straight weeks of gains, I'll correct myself, on the European benchmark in this equity market, Tom. That is phenomenal. Well, a run of gains and a euro that's through 120 again.
Beneath the headlines today, Coca-Cola out. And John, you know, we look at the big banks. We'll look at Apple. I believe it's on the 28th, Fed Day maybe. But you know what? It's going to be drip, drip, drip by the earnings here. And Coca-Cola reaffirming their organic revenue growth. It's 6%. That's a big number. That would be 4% maybe without Powell, without fiscal stimulus, without this boom economy. That's an important number out of a company that's had its share of struggles.
Mr. Quincy getting it done over at Coca-Cola. First quarter organic revenue plus 6%. The estimate 0.51, Lisa. It's not bad, is it?
Well, that's exactly where I was going to go. The estimate being so much lower than the actual figure. And it raises this question that we've been asking, frankly, throughout the past couple of months. Are analysts overestimating or underestimating the growth in the earnings that we're going to see? And so far, it seems like underestimating. Markets, though, might be following a different tune and might have been already pricing in much more than the analysts were saying, John.
So I think this is important. Away from the analyst conversation, I think you would bring up an important dynamic or allude to one anyway. There is a difference between what economists are expecting, what markets are already priced for. And I think it's been really interesting just to see how the ECFC function has changed over the last several months, Tom, which is basically tracking the forecast here at Bloomberg on the terminal. It now has a 6 handle. It's going 4, 5, 6. But this rally in this market started really, when did it really accelerate? Start of November. Vaccinations improved, or at least the outlook for vaccinations improved off the back of those headlines when we started to get the efficacy ratings, the end of trials, and we started talking about emergency use authorization. This market was off to the races. This market was well ahead of a group of economists that finally got together and said at the turn of the year, maybe it's a 5 handle. In fact, maybe it's 6, and for some other banks, maybe it's 7, or it could be more.
And John, on inflation, Paul Krugman with an important essay, wonkish as he puts it, a little bit complex, but on Atlanta, sticky inflation. If there's different measurements of inflation, and if you look at the so-called sticky inflation, maybe that fear's overdone as well.
We'll talk to Dan Alpert about the fear of inflation in just a moment. Let's turn to the price section at the moment too. Equities look like this on the S&P 500. I'm not doing that right now. We'll find some time for it. We're down 10 on the S&P. We've declined 0.25%. Yields in a basis point, 157.11. Wasn't that a surpriser last week for many of you? To see that data, to see it move in the direction it went in, retail sales better, inflation higher, yields lower, 157.11 on 10s. Euro dollar has a 120 handle, 120.47, up 0.5%. The countdown to Christine Lagarde this coming Thursday, the main event in the diary for this week, Lisa.
Yeah, definitely, especially because the Fed officials are all quiet in the blackout period ahead of their next meeting. I'm taking a deep breath. I don't know that I want to go back here because I know we've gotten the show back
just
on
get
the
it down. Go on.
UEFA is meeting today to approve a new plan. This is the Union of European Football Associations. I got that right, John?
Something like that.
Something like that. Basically, they're coming together to approve a new plan to try to make the teams play more games and also to split some of the money among the teams. This is a layperson's, just outside observers analysis of the system. And this is the reason why we're talking about the breaking away of that Super League that wants to take more money for itself. We'll be watching watching this to see where this tit for tat goes, and I'm sure everybody will analyze it way better than I just did. 11 a.m. Moving on, Senator Joe Manchin of West Virginia will be meeting with coal mining union leaders. The idea here is, how do you push a plan for getting a better carbon emissions footprint in the United States while also supporting the jobs that are so essential to the West Virginian economy? And then 1:15 p.m., Joe Biden, President of the United States, meeting yet again with another group of bipartisan Congress members. Interesting that this follows Joe Manchin, because he actually would like to see Biden take a more bipartisan approach before he signs on. How much is this in good faith? How much is that $800 billion skinny infrastructure plan, the thing that will be discussed in this meeting? And John, can you believe that we're talking about an $800 billion stimulus that is the skinny plan? John.
How the story of last year has just changed absolutely everything around fiscal. Some people reach out to me sometimes and say, why do people speak so fast when they come on Bloomberg Surveillance? And here's the deal. The reason Lisa spoke so quickly then is because if she leaves a gap, just a breath of air within the conversation, what do you think Tom does? Tom rushes in and he's going to talk about football. So you just have to sort of go from one thing to the other really, really quickly without pausing. Dan Alpert joins us now, Westwood Capital founding managing partner. Do you like that, Tom?
That was
perfect.
You
like that. Dan joins us now. Dan, let's talk about that irrational fear of inflation this year, sir. Your take.
Can I speak slowly, though?
You can speak slowly. Dan, you know how this works. Leave a gap, expect to get stamped all over. But please, good luck.
Go ahead.
Dan, I was asking you, sir, about the irrational fear of inflation. Why do you think it is irrational? That, not football.
Anyway, look, the CPI data came out, and it was very interesting. You saw core goods inflation only go up 0.1%. Putting aside all the base effect issues, people looking at year-over-year data, which is meaningless at this point, given the fact that prices fell so much during the pandemic. The month-over-month data is going to be very interesting. Looking at core, we're seeing a considerable ability of goods to be imported from China and elsewhere without forcing prices up, and that's really because of a continued excess capacity from those countries. You look at the cost of freight containers, the shortage of freight containers, because we're importing so much. Our goods trade deficit is reaching all-time highs, and so what the big question going forward is: are you going to see core goods actually inflate or kind of stay where they are? And is this inflation issue really due to distortive exercises in, say, the housing and shelter sector? If you looked at lodging, for example, you saw 6.6% inflation in that sector because hotels obviously were operating at zero for a very long period of time. So, this is going to be a complex question. It's going to be very difficult to imagine that there's going to be considerable pressure on goods prices, given the elasticity in prices from imported goods.
The behavior here, Dan Alpert's codified in your book, The Age of Oversupply. Post-pandemic and with the boom economy that we've got, what does the new age of oversupply look like?
Well, the big question with regard to the age of oversupply is whether or not we can trap U.S. spending here in the United States. Obviously, the biggest chance for being able to do that is to move forward with this infrastructure bill. We just flew a helicopter on Mars a couple hours ago, and I got to think that we can repair, replace, and expand infrastructure in the United States. So if we can actually do that, government procurement gives us the opportunity to channel considerable order volume to U.S. manufacturers and actually enhance capital investment by those manufacturers and thereby employment. And that will reflate the economy, probably in a very positive way, because it'll reflate it through growth in wages. You are going to see distortions. Cecilia Rouse's piece this morning out of the White House was very informative. Average wages will go down as you recompose the labor force and you bring back some of those low-wage, low-hour jobs. The big test going forward as to whether or not we can reflate the economy is going to be, can we move from this enormously high concentration of low-wage, low-hour jobs into higher-wage jobs as a result of this infrastructure plan.
Dan, you mentioned Vartan Gregorian, one of our great academics, dying here. Just a fabulous life in academics and spanning all of our globalism as well. Over the weekend, I saw a sum of all our fears. This fear, that fear, the next fear. Where does the optimism come from as Vartan Gregorian had?
Oh, I'm so glad you mentioned him. He was a great mentor to me back in the 1970s. He went on to one of the greatest careers ever and was an eternal optimist.
Yes.
The beauty of his life was understanding what this nation could actually deliver. He did that through education and philanthropy. And I think right now we're in a wonderful position to move forward with a huge pivot from what has been, roughly 40 years of abandoning government as a force in the economy and rechanneling the ability of the fiscal agent to move forward with spending and channel that spending to things that are useful to the commonwealth of all Americans and all states.
Dan, we appreciate your time this morning. We've got to leave it there, though. An important final word. Dan Alpert there, Westwood Capital Managing Partner. I want to turn to this market just briefly. In the FX market, some pronounced dollar weakness through much of G10 right now. Norwegian kroner on top. Swiss franc in the mix as well. No real theme here apart from dollar weakness. Sterling out to a 139 handle. Cable 139.23. Up there by about 6/7 of 1%. And a euro that's stronger too, Tom.
DXY, the blended currency of the major trader partners. I haven't looked at Bloomberg Dollar Index, which is frankly better math. But, John, we are outside 2 standard deviations of weakness, spanning from a peak of early April, where it's a 4 standard deviation +2 down to -2 move. These are substantial moves.
Lisa, 91 handle on the dollar index. It is a week for Europe.
Yeah, this is a week for Europe as people reassess what you've been talking about, basically, where the potential surprises could be to the upside. And it seems like they've been baked in the U.S. and perhaps not as much in Europe. I will say also increasing discussion of cryptocurrencies, but by digital assets in terms of from the central banks themselves, the digital yuan, leading to more talks of a digital dollar. I'm really watching that this week.
We'll touch on those themes through the hour on this program. We'll do that with David Riley, Blue Bay Asset Management Chief Investment Officer. He'll be joining us a little bit later this hour. From New York City this morning, good morning to all. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. In your bond market, yields were in, and now they're unchanged. 157.47 on 10s. In the FX market, talked a little bit about that dollar weakness. Euro dollar there at 120.46. And in your equity market, we're down 9 points on the S&P 500, off all-time highs by about 0.2 of 1%. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. In Russia, authorities decided to move opposition leader Alexei Navalny to a prison hospital. That's after allies warned that his health was failing. Plus, the U.S. threatened the Kremlin with unspecified consequences if he dies. Navalny has been on a hunger strike since the end of March. In Minneapolis, closing arguments are set for today in the murder trial of Derek Chauvin. He's the white former police officer who's accused of killing a black man, George Floyd. The killing of another black man by police in a Minneapolis suburb has increased anxiety over the potential for violent protests. China says it has no desire to topple the dollar as the world's main reserve currency. That's as Beijing takes bigger steps in creating its own digital yuan. The deputy governor of the People's Bank of China says it's creating the digital currency for domestic use. The CEO of video game retailer GameStop is stepping down. George Sherman is ending a tenure marked by a persistent slump and failed performance targets. GameStop has become a favorite of Reddit day traders this year, sending the stock soaring several-fold. But the company missed both sales and profit estimates in its most recently quarter that it reported. This could be the biggest shake-up in professional soccer in decades. A group of the world's richest soccer clubs are planning a European breakaway league starting in August. Amongst those taking part, Manchester United and Real Madrid. The Super League teams would play each other midweek as an alternative to the prestigious Champions League. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
We committed to working together to take on the challenges from China and on issues like the East China Sea, the South China Sea, as well as North Korea, to ensure a future of a free and open Indo-Pacific. Japan and the United States are two strong democracies in the region, and we're committed to defending and advancing our shared values, including human rights and the rule of law.
There has been a huge push forward from this administration on the foreign policy front over the last week. That will continue, no doubt, this week as well. That was the President of the United States, Joe Biden. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Farrow. The week ahead, very much about Europe with the ECB decision in the mix this coming Thursday. Going into that, futures lower. We're off by 8-9 points on the S&P 500 and down at 0.2%. Euro dollar 120.42. It is a weaker dollar through all of G10. And in the bond market, standout mover last week, wasn't it? Yields in, yields in, yields in. Yields right now, Tom, unchanged, 157.47 on a 10-year maturity.
Look at an intraday dollar just down to new weakness here moments ago. 91 to breach 91 would be a huge deal. To breach 90 down to an 89 level, really unimaginable. That begins that weak dollar trend many have been calling for. On Washington, a briefing now from Emily Wilkins, our Bloomberg government reporter. Emily, off of the Biden discussion we heard on China from, I believe, Friday, and off of the zeitgeist I see, it seems to be a resurgent or reinvigorated State Department. Led by the Biden administration and maybe moving on from the Trump years as well. Do you perceive it in Washington as a foreign policy mission and State Department like before, or is it something new?
Well, I think with the State Department, there was a big message that was sent when President Biden asked Anthony Blinken to go ahead and head the Secretary of State. I mean, Blinken is very, very close with Biden. There was a sense that the two would be working very closely with each other, and that when Blinken talked with individuals, that he would do so with the authority of President Biden, just because the two of them are so closely together. Blinken understands that the State Department has gone through a lot of changes with the previous administration. He's trying to sort of bring it back to what it was perhaps under the Obama years.
I mean, let me ask a dumb question here, but it's Dumb Question Monday. Lisa killed football, and I'm not going to be able to do that well here.
Sarcasm.
Football, Emily, not the Redskins. The football, soccer, English soccer.
The other
football. Thank you, Emily. Nailed that. But Emily,
you're not sucking me into this.
Are there people? I'm trying, John. Are there people? Are there people at the State Department? I mean, is it an empty building, or have they peopled it in the first 100 days?
I mean, look, to be totally honest here, the Biden administration did run into some roadblocks in getting key individuals confirmed within his cabinet and within the wider government. But it's been almost 100 days at this point. And yes, they've gotten a lot of people in that State Department. It is up. It is running. It is given a lot of authority sort of back to it that might have not been there with that previous administration. And there's been a huge focus. I mean, look what happened last week in Afghanistan. Look what happened with the Japanese Prime Minister. Look at the focus that we're going to have this week when President Biden meets with world leaders to discuss climate change on April 22nd. So there's definitely a huge role for the State Department here, particularly as President Biden decides to take on China by making sure that he has strength with his allies.
What's more important to reclaim American leadership, the State Department or the Health Department? I mean, it really raises a question about the U.S. leadership when it comes to COVID. Are there discussions about shipping out vaccines to the rest of the world?
There is definitely a question at this point about vaccine diplomacy and what that looks like, particularly as the U.S. starts to really see a lot of its population become vaccinated and realize that it's probably going to have a number of extra vaccines. We haven't heard a lot of details from the Biden administration on exactly what this will look like, but they're certainly conscientious of the fact that in order to get truly back to normal, be able to have people travel, to do business abroad, to really get back to the point where we need to be, that we need to have other countries vaccinated as well, that it's not just the U.S. here.
Well, I raise this discussion based on the foreign policy discussion as well. This idea here that the U.S. is trying to reclaim leadership in the world after President Trump did lose some clout with respect to other global leaders. There is a question of whether Biden can do it through outreach having to do with the pandemic. Is there popular support for that in Washington, D.C.?
I think the attitude in D.C. is that the U.S. needs to make sure that Americans are vaccinated first, that we need to make sure that we are in a good spot before we start giving vaccines to other countries. And look, we're just in this point now where the vaccines have gotten to the point where anyone above the age of 16 are able to get a vaccine. We're going to be sort of looking to see how many Americans get them, what that looks like after the next couple months. And I think at that point, the conversation is going to pivot more to how do we help our allies? Who needs the most assistance? Where do we send these extra vaccine doses?
Emily, before you run, just give us a comment on something, which is Cecilia Rouse out this morning with a blog post on the White House, and we had a similar thing from Jared Bernstein a couple of weeks ago. Jared was talking about inflation, Cecilia this morning talking about the compositional effects behind the wage growth number in America. There's an outreach here to help explain some nuanced economic data in the next couple of months. Just how pointed is that? What's the objective, Emily?
Well, I think the objective is that as you see this large bill come together, this $2.25 trillion infrastructure bill, you're going to see a lot of Republicans say, hey, we have concerns about inflation, we have concerns about the debt, we have concerns about deficit. And this is the White House preempting a little bit those criticisms, if you will, by trying to get out in front and try and discuss with the American people why they are looking at the amounts they are looking at and why they think this is going to be a good thing for the country overall and not lead to crazy high inflation or unmanageable amounts of debt.
Emily Wilkins of Bloomberg Government down in D.C. Emily, good to see you. Good to catch up, as always. Tom, there is an important outreach going on here from the administration to help explain some of the complicated economic data we might see. And on the wage growth number, I do think it's important to talk about the compositional effects. Well, last April, we had a surge in wages because of the compositional effects of the lower earners dropping out of the workforce. And you have to reverse engineer that potentially over the next several months.
I don't think it's any different than the first days of the Biden administration where there were those press releases, I believe, John, it was at 5 a.m. or whatever. We're all getting used to the information flow here still versus the previous administration. John, I've got a huge amount of mail. Thank you for listening on radio and television over this football thing in England. And I mean, it just moves forward. And John, do those smaller teams get pushed aside? And I don't mean like, we make jokes about Newcastle or Blanchflower's Cardiff, but the teams just below these teams, what do they do?
Well, I think for the teams just below, they want to earn the right to compete in the premier European club competition, which right now is the Champions League. And the bigger clubs, and this is not just an issue for England, it's also an issue also for Italian football, for Spanish football, and maybe even German and French football, though we haven't had a commitment from any clubs from those two countries just yet, Tom. for the future of European football and what the Premier Club competition looks like. And ultimately, the big names want more control. And that's what it's been about for the last 20 years. And we discussed this in the previous hour. And I think that our editor-in-chief, if he did actually email you and talk about this being a gambling chip, Tom, that's what it is. It's the start of negotiations with UEFA, or a continuation of negotiations with UEFA about getting more control. Maybe this time they will have their bluff called. Maybe this isn't a bluff. I don't know, Tom.
I've got 4 more questions. Lisa has 7 more questions, but we don't have
time. How convenient.
Go ahead.
Futures down 11.
Look at those markets.
Oh, it's Micklethwaite. Hi.
41.65. What's he going to say?
I'm sorry.
Have you told him John's off tomorrow?
Yeah, I said but. I'll never say but again.
Wednesday.
I'm sorry.
Yields
Yes.
157.82.
Sorry, John. Yeah, go Leicester. Yes, thank you.
Thanks, Tom.
Talk faster.
Value out on Monday morning. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Record highs and coming off the back of 4 straight weeks of gains on the S&P 500, 7 straight weeks of gains over in Europe. Here's the price action right now. Done well in cash, haven't you, Tom? Equities down around about 10 points, call it 11 on the S&P 500. We're in 0.3% on the Nasdaq. We're in 0.3% on the Russell. We're down 0.7%. Deep breath. Deep breath. What do they tell me in therapy?
3, 2, 1,
Breathe.
go.
Switch up the board, get to the bond market. 2s, 10s, 30s look like this. Yields unchanged at 157.82. They were in 7 or 8 basis points on a 10-year last week. Here's a story for me. Where does the positive upside surprise come from? How many times have I asked that question over the last couple of weeks?
Lots.
Maybe it comes from Europe. Manulife, BNP Paribas, talking about maybe a German 10-year ending the year at 0. It's about negative 25 basis points right now at 0. The other pushback, Tom, and you mentioned it earlier this morning, negative 50 basis points is still the year-end target over at HSBC. That's your tug of war right now. That's your debate. But if we get a normalization on the rate curve over in Germany, I wonder what the US curve is going to start looking like. Something to think about a little bit more in the weeks still ahead. Switch up the board. We'll finish on foreign exchange. Euro-dollar shaping up as follows this morning. 120 handle. Dollar index, 91 handle. Dollar weakness, the story through G10. This has been the hardest one to call through 2021, and everybody has been whipsawed by it, Tom. We came into the year looking for dollar weakness. We got dollar strength. We started to get that dollar strength, and now we're talking about dollar weakness all over again.
Is anybody
Goldman,
ever right
125.
on foreign exchange? Does anybody ever nail it?
Sometimes they are, for a heartbeat.
For a heartbeat.
Sometimes they are. Euro dollar 120.36, up 0.4%. Do you want to do football whilst we've got some time?
Oh my God, Romain is here. Come on. Come on.
We're going to skip it.
How about those Padres?
Come on, Romain.
Romain Boston, good morning, sir.
Hey, good morning. Remember, in FX, you don't have to be right. It just has, the other guy just has to be wrong. Last week, of course, the macro story was really what drove U.S. equities. This week, it's going to be a little bit different. Not a whole lot on the economic front. And, of course, you got a little bit of a quiet period ahead here as we wait for the Fed meeting next week. It's all about the individual stories. Of course, you had that crash down in Texas involving that Tesla Model 3 that, at least according to authorities, no one was actually in the driver's seat. 2 fatalities in that. That's weighing on the shares as an investigation as to what happened goes on. GameStop apparently going to get a new CEO. I guess once they find a new CEO, they'll get rid of the old CEO. Investors seem to like that. Not quite clear what's going on. Tom, your partner in crime, Roaring Kitty, doubling down on his bet on that stock. So maybe this is your entry point. And Peloton taking a leg down here. U.S. regulators here now looking into reports of some of those deaths and injuries involving its treadmill product. I'll flip up the board here and let's take a look at some of the other names going on out there today. You got Corning taking a move higher here, 46.25 right now, up about 1%. In fact, a lot of the Apple suppliers are rallying this morning ahead of that company's event on Tuesday. They're expected to announce the normal slate of new iPads and computers there.
Coinbase, nice choice.
Absolutely. Coinbase, there's your Coinbase update on the day, 337 down again. Of course, you had quite a ride over the weekend with regards to Bitcoin. That right now hovering around that 53,000 level. And then there's your Manchester United, just for you, John. I know you guys are really into this big story here. 1737. These are the U.S. shares here, Tom. If you want to get in right now on European
John,
sports.
how do they trade? I mean, how does Juventus or Man U trade as a publicly traded company? When they win, do they go up?
If they get more money, they go up. If you win the Champions League or qualify for the Champions League and you haven't been expected to qualify for the Champions League, Tom, then I imagine you go up.
Wait, Romain, did you just give a market call? Go into European football for real?
No, I think he was being specific to Tom's cash position. Just to bail out Romain a little bit. I'm not sure this was for the broader audience. I think it was very much for Tom. He's just giving Tom some ideas.
Yeah, I don't make any calls here. I just put the numbers out there.
Do you hedge this? I mean, do you go long Man U, short Juventus?
Bitcoin. Yeah, I do a nice pair trade on Man U and Juve, Tom. I'm really thin trading on Manchester United in early trading. Tom, no. Romain, thank you.
Romain Bostic with more English football this afternoon on.
Romain's right. Tom, just quickly, Romain is right. Yeah. Just look at the price action here. This is about the extra money these clubs will get. Yes. Manchester United, Juventus up 11% in trading over in Milan. This is part of the story. Yeah. And this is the story.
And we spoke with our European football expert, John Micklethwaite, who reports this morning that it is it's a gambit. It's like the Queen's Gambit, except it's 12 teams gambit. Michael Kushner saves the show right now. He's with Morgan Stanley, their chief investment officer on radio and television, someone with perspective. Michael, over the weekend, I saw a massive re-rationalization of worry. There's no other way to put it. What is the outcome when you see so many people worrying about our collective set of worries?
It's quite interesting. But if you look at globally, I mean, the number of positivity cases are rising. India's got problems. There's several countries around the world. Turkey has issues. The United States has had the largest vaccine rollout outside of a few small countries. And I think that's one reason why the U.S. is doing a little better right now. Things look a little up and up on the U.S., except for bonds, which are looking a little bit on the down and down.
I mean, I look, Michael, at what to do here, and I guess equity markets is one of our focuses, but you're working in fixed income. We've seen this yield lower move, price up, yield down. Is it tradable?
It's very difficult. We still think longer term the trend in yields is higher. I'm not sure how much higher. We were talking about 2% kind of a longer term rate for 10-year treasuries. But in the short term, we had a lot of positive news on the economy, a surge of positivity in terms of the data in March, and the market got ahead of itself in terms of predicting when the Fed was going to move. At one point in March, they were predicting a rate hike in 2022, and the Fed has successfully, I think, pushed against that logic and that narrative such that now it's being pushed back out again. If the market continues to trade short and the Fed continues to double down on its no rate hikes till mid-2023 or even later than that, then the Treasury market has room to stay firm. I mean, yields staying on the low side.
Michael, can you talk about the relationship between the US Treasury market and Europe right now? We've had some really interesting calls. The Bloomberg team over in London putting them together. BNP Paribas, Manulife looking for 10-year yields in Germany to maybe turn positive by year end and get back towards zero. What would that mean for the Treasury market, Michael?
That's a very good point. Another reason why I think treasuries have done so well in the last several weeks is that yields are exceptionally high in the U.S. relative to the rest of the world. And with the vaccines rollout accelerating in Europe and getting better and lockdowns presumably ending at some point in the late spring, that Europe will catch up. So one constraint I think that's been for the rise in 10-year treasuries has been the low level of yields outside the U.S. So if that narrative is some merit to it, then in order to get U.S. yields higher, European yields have to go higher first in order to catch up a bit with the U.S. So yes, I think if you're looking for higher U.S. yields, you probably have to look for higher European yields first.
What if I'm looking for income right now, Michael? Where am I going?
Right now, the place to go is in credit markets, whether it's in structured credit like mortgage-backed securities and/or investment-grade credit, corporate credit, or high-yield credit. In a world of stability, are we entering a kind of Goldilocks period where things are slowing down? Remember, the Chinese economy is slowing down. It's very likely on an annual basis it will be growing slower than the U.S. in the first half of this year. That's good news for the global economy. We don't want the boom being too strong such that central banks actually need to push rates higher sooner than otherwise. So a slowdown in China relative to the rest of the world, or emerging markets not doing that well in the short run, relative developed markets, also softens the surge in seeing the impact of the surge in spending in the United States, which lengthens the business cycle, which lengthens the probability that credit spreads will stay low.
I have to ask this, Michael, because we are seeing post-credit crisis tights on spreads, basically the extra yield that investors earn to own credit over rates. Is there any sign of froth? Are there any pockets? Or is this all making sense to you based on where we are?
It makes sense to me. If you look at the history of credit spreads, they are at the tight end of the range. In many cases, they are, depending upon the security company and rating, they are near their all-time lows, which we saw in the very early 2000s or in the mid-90s. However, we are in a relatively unique economic situation. Historically, when do you see credit spreads widening and see significant underperformance, whether it's high yield or IG, is when we're nearing the end of the business cycle and the Fed is raising rates. If you look historically, that's what you see. And right now, it looks pretty clear to me that the Fed is not raising rates till at least probably the end of 2022, 2023.
Michael, it's good to see you. As always, good to hear from you. Michael Cushman, Morgan Stanley CIO of Global Fixed Income. Yields in last week by 7 or so basis points on a 10-year this morning. Unchanged, Tom, at 158 on 10s, on 30s. Your yield, 227.
You know, after the gloom of the weekend, John, a real yield from a negative 0.81 to a negative 0.79. I guess that's a little bit of a move here and a recalibration as well. To me, it's what you see with Coca-Cola and also with Harley-Davidson. I mean, it's a discrete, smaller story, unique to motorcycles, John, around the world and across America. But I'm sorry, when you shift your revenue guesstimate, any responsible manager from 22.5% up 10 full points to 32.5%, that vector, that dynamic gets your attention.
Lisa, raising the outlook on a better 2021. How many times have we seen that?
I'm struggling right now because I know you're going to make fun of me for being a Debbie Downer, but I'm just trying to understand the consequences of the moral hazard of allowing companies to pile on debt at very low costs. It keeps them alive for longer. What does it do down the line? Have we forever prolonged a credit default cycle, or is this going to be something that we will feel at a later date? And there is a question of the precedent that the Fed has set. Are they part of the fundamentals, as you've asked before, John, in terms of swooping in and saving credit markets if everything goes south?
Well, every dollar of debt is not equal, so let's think about where the dollar of debt has gone so far. And we mentioned last week on this show the amount that's gone to refinancing year to date for high yield. So 72%, according to Barclays, more than 70% of high yield issuance has gone to refinancing. So these are balance sheets that probably look better, Lisa, not worse, because of the refinancing and pushing out the maturity of that debt they bring into market too.
Although you have to look at where it was being refinanced. I mean, you saw a lot of refinancing of debt that was incurred at the peak of the pandemic when people were borrowing at very high costs. I'm thinking of the airlines in particular. If they're refinancing at lower rates, they still have net significantly more debt now than pre-pandemic. We are in a less creditworthy environment from that point of view than pre-pandemic, and yet look where we are in terms of valuations.
The broader question I think you're touching on is the tolerance to higher rates in a world with more debt. Is that fair? Would that be right?
That would be well done.
And I think that's an important question we've got to ask. Not just for corporates, but for sovereigns too.
I'm sorry, John, it's the pendulum of moral hazard. That's what we're dealing with.
The moral hazard now this morning too.
It's the pendulum of moral hazard.
Trying to make it a little bit more balanced. Do my best. Equity futures down 10 on the S&P.
John, San Diego crushing it yesterday. National League ball is
I didn't watch it. You haven't mentioned the Red Sox all morning. How did they get on?
I'm watching the Padres. The Red Sox are doing okay. They're doing better than the Yankees.
Oh, Tom, New York. New York. Give us a song. You've got one in you.
I'm thinking radio. Right now, you know, it's like...
We're being told
these little town blues.
There you go. Bloomberg. I knew you had a tune good to go. New York looking beautiful.
Da, 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 da. It's beautiful. Finally, spring. Sprung. Padres.
With the First Word News, I'm Rishka Gupta. President Biden wants to prove to the world this week that the U.S. has rejoined the fight against climate change. He'll promise cuts in greenhouse gas emissions that are both ambitious and achievable. But after policy reversals and years of inaction, the U.S. will have a wide credibility gap to overcome. An international climate summit begins this Thursday. A case at the U.S. Supreme Court today will pit the Biden administration against Democratic lawmakers and progressive allies. The administration will defend the government's policy of blocking permanent residency applications from thousands of immigrants who've been living legally in the U.S. for years. It involves the Temporary Protected Status Program for immigrants from countries in crisis. Despite the rollout of vaccines, global coronavirus infections have hit a new weekly record. In the past 7 days, 5.2 million people infected. That was a 12% increase from the previous week. The worst outbreaks are coming in many countries that aren't equipped to cope with it. And Citigroup is pushing ahead to set up new investment banking and trading operations in China. Bloomberg's learned that the bank will soon name a CEO for the business. The goal is to set the operation running within 18 months. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We're about 0.5% of global wealth in crypto. Think of what I just said. 0.5% of global wealth in crypto. That's going to be 2, 3, 4% in the next few years. And so this economy is only going to grow.
Michael Novogratz there, the Galaxy Digital founder and CEO from New York City this morning. Good morning. Alongside Tom Keene, Elisa Abravitz, I'm Jonathan Ferro. Here's your price action this Monday morning, shaping up as follows on the S&P 500. All-time highs and a week of gains, a fourth straight week of gains. We leave behind in Friday's session. We are down about 0.25% this Monday, off by 10, 11 points. In a bond market, your yield now unchanged at 158 on a US 10-year. In the FX market, it's been a theme of this morning. Dollar weakness, euro-dollar, 120.33, and stronger euro by 0.4% against the US dollar. In the commodity market, 63 handle on WTI, just about holding on to it, but down about 0.2%. Muted price action outside of foreign exchange. Tom, crypto and crypto assets getting hammered through the weekend has got to be the story.
I take issue with the phrase hammer. They were down, and certainly they made the headlines over the weekend. John, the chart is a little bit ugly, but it's contained, I would say, within the home on the range, and we'll see how that goes forward. Michael McGlone has been brilliant in providing us with sane analysis here. Michael, I don't want to talk about 63,000 to 56,000 and that. The fact is, the comedy act known as Dogecoin was an invented coin, I believe, by 2 IBM software engineers. Dogecoin is almost a tulip bulb. What does Dogecoin signal to the rest of the legitimate crypto market?
Dogecoin is just plain fun. I mean, I speak to my kids
about it. How many
about
people are going to lose a lot of money with just plain fun?
Well, I hope they understand. People are plain understanding. You put in maybe a couple $100, something that doesn't really matter, and you play with it, and you double dog dare your friends on Twitter or at the bar, and that's what's happening. But we mentioned there's a massive amount of liquidity in the system, and Dogecoin has become international. It's the thing that people like to play with, and it's also kind of the, well, we don't care about the system, let's gamble.
So if John Farrow and I double dog dare and the Tots play in AC Milan in the new Super League, is that any different than betting on Dogecoin?
It's 24/7. It's global. And it's never happened before. We can do it right on your phone.
Wait. Michael, the only thing 24/7 is a hate mail, John, I'm going to get off of this conversation.
Tom, I will say this, that really 24/7, the only difference between you guys betting on AC Milan and Dogecoin is that you're not awake all the time. Mike, there is a question about what prompted the swoon over the weekend. And I take Tom's point that to say it was absolutely a plunge or it was a demise of the crypto asset is pretty much of a mischaracterization. And yet it did indicate a cooling off, a rapid cooling off of froth that built last week. Is this a tipping point in your view?
No, it's just noise in the trend, Lisa. And it's one of those things that you just nailed. It's one of the things I used to love when I was in the trading pits. And you'd speak to a journalist and they ask you, so why is the market down today? And I said, well, because it was up yesterday. And that's the absolute truth. The market just went too far, too fast. It's in a little bit of a correction. It went to the 50-day moving average. The key support I see in Bitcoin is 50,000. There's institutional bids below the market seem to be creeping higher around 50,000. They don't really trade on weekends. They're coming back in. Here we are back at 56, 57. So I view it as just, it's noise within a bull trend. The key thing to remember is I don't think I can really get bearish on Bitcoin until we get past this period of disseminating U.S. ETFs in plural.
Well, let's put this aside for 1 second in terms of a market call, but in terms of regulation, because that was one of the many explanations for the swoon, that there were rumors of some sort of U.S. Treasury action on money laundering using the crypto asset. I'm wondering whether true regulatory action could torpedo the value of Bitcoin in a way that perhaps has not been priced in.
No, Bitcoin's been through that. There was this thing called the Silk Road. The feds caught the perpetrators right away because you can track every transaction in Bitcoin. The key difference is if you're a criminal and you want to do something, use a privacy coin like Monero. You're not going to use Bitcoin because you're going to get caught. The feds will find you. Even if you use a mixer to mix up your addresses, they will catch you. It's happening in Bitcoin. It's such a small part of the percentage of total trading now, but there's privacy coins, and if there's going to get regulation, we'll see it there. And I think the key regulation we're going to see is in digital dollars, which is right now the most widely traded currency on the planet. Actually, 4 times the 24-hour volume is Tether, the digital version of the dollar. That's where we're probably going to see some more regulation.
Mike, what's the story over in China about a digital yuan? How's that connected to any of this, if at all?
It's just a matter of time for them to do that. It's a matter of time for all of us to do that. The key thing is China has to do it from a central bank standpoint. The U.S. doesn't have to do anything, and it's happening organically. Digital trading of dollars. Now, a lot of the volume in Tether and digital dollars lately has been because people are getting out of they're hitting their stops in cryptos and Bitcoin. But it's happening organically on a global scale. The world wants to trade this digital reserve currency, and then it wants to invest in this digital reserve asset, which is Bitcoin.
Mike, it's good to catch up. As always, Mike McClone there, Bloomberg Intelligence commodity strategist. I think the three of you were teaming up against me saying it was a wrong characterization. Okay, here's the accurate one. We were down 7.52% in Sunday's session. Is that better for all three of you?
No, hold on a second. Let me set the record straight. I actually think it was a big decline, right? And I didn't take issue of that. Okay. But I think that the point being it didn't necessarily indicate the end of the world, right? But I think that's fair. No, I think that was fair.
Down 7.5% on Sunday.
Tom's just giving you heat.
Yeah, I know. And Mike laying into journalists as well. See that one?
Mike was difficult.
Do you see that one? Do you see that one? Do you like that? I've always liked the Bulls when you call them up and say, what do you think? I haven't changed my mind. Shock.
Can I Segui?
Shock.
John, can I Segui here on radio and television?
Go on, Tom. Go for it.
Does Lionel Messi want a Super League? Do these stars, like particularly in Europe, I don't even know who they are. I know the name Messi, but do they want a Super League?
Thanks,
John?
Tom. I'm not trying to get into the business of telling you what I think people are thinking. What's interesting, though, Tom, as you mention it, is that the big players haven't come out and made any real statement on this just yet. That could be interesting, especially if the likes of FIFA and UEFA stand by this idea that they won't let them play in international football. There is a certain amount of pride involved in this game beyond just getting paid, Tom. They want to play for their country. They want to be in the international competitions. And I wonder what that would mean if they go ahead with this breakaway league and they're not allowed to participate in their domestic leagues, and these players are not allowed to participate for their country either.
Really important question, John, and it's unfair to you, but I'm going to go there anyway. Seriously, do you feel this will get solved quickly?
No idea, because we have been talking about this for 20 years. What I want to say is different this time, Tom. JP Morgan, reportedly the bank, really pushing this too, underwriting this effort. So
are they pushing it, or they're just underwriting it, which is a banker's service?
Pushing it. I mean, you pick your words. Apparently, I'm picking the wrong ones this morning.
Okay.
But
can I Segui?
Go on.
Just back to what we were talking about with crypto assets.
You want to go back to crypto again?
Well, I mean, if you wanted, do you have more to say?
Have you got something to say?
Yes, basically, there was a really good note by Chet Naya of Morgan Stanley over the weekend where he basically was saying we do not associate disruption with central banks, but a major move to introduce central bank digital currencies could actually disrupt the financial system. This idea that a digital dollar, if created by the government, could actually attract money in its own right as a digital store of wealth, like a commodity, and could create divergences within the system. I thought that was interesting.
You know what I thought was really interesting, the whole ban cash conversation, was a piece that Andy Haldane of the Bank of England put out several years ago. He talked about the idea that if you impose negative interest rates at that point, Tom, it could be far more effective because you can't store the cash anywhere and you'd actually get punished for holding money.
Interesting.
And that, for me, was a really interesting concept from several years ago. And we're conflating a couple of ideas here, I know, but why not?
Why not?
Coming up, David Riley, Blue Bay Asset Management Chief Investment Strategist from New York.
We'll ask
with
him about the
equities down a
pendulum of
quarter of
Dogecoin.
1%. I can't wait for the next hour.
Dogecoin. Can you buy the pendulum of Dogecoin?
Yes, we do, Lisa. It's another 60 minutes.
Dogecoin.
This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening. Buses all around you here.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now.
where the music plays on. BSO season sponsored by Bank of America.
I think we could have an employment and productivity boom and a real change.
Fundamentals will trump here, and fundamentals are going to be incredibly strong over the remainder of this year.
Everything we follow would suggest every bit of inflation is being passed through and then some.
There's a worry that we're getting into bubble territory, but at the same time, it's also essential to be there.
The Fed's going to be caught by surprise because it's really following the wrong model.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television, worldwide. A Monday. It's a European week. John, we're focused on America, the soccer uproar, and the rest of it, but it is a week for Lagarde.
Yeah, we've got to talk about the ECB as well, Tom, and some really interesting calls out there. We've touched on them the previous few hours. Euro dollar 125, a 3-month call over at Goldman. BNP looking for a positive yield on a German 10-year. Maybe by year end, we're at negative around about 25 basis points right now. It's an inflection point. And many people believe it is, Tom, because vaccinations, the progress we've made in Europe has just been so much better in the last couple of weeks relative to where we were.
The inflection point, John, over the weekend of the debate on inflation, the debate on interest rates, even the debate on GDP growth, to me, John, it's still about the obvious boom economy.
Capturing that was the bond market last week. For me, for Lisa, for you, and for pretty much everybody else. This market has been positioned for better growth. We started to see this number. These numbers, how did this bond market react? Yields lower. Yields lower against inflation that was higher than expected. Yields lower against retail sales that was better than expected as well. Is this just a consolidation or is this a turning point? Consolidation probably feels like the right word after the move we've seen in the previous few months.
Lisa Abramowitz, an open question to you on an open weekend of reading. What did you observe in your reading this weekend?
Well, that we are on a tipping point, and I would say that we're on a number of them. And when it comes to the bond market, the idea here that we're entering a phase where people believe in the Goldilocks once more, that we're going to get these low yields for longer, that is sustaining some of the equity rally, some of the credit rally. How sustainable is that? And this actually comes after last week's conversation with a number of fixed income managers who came on here and said, listen, we would fade this rally in the bond market. We see bond yields going higher. They reasserted that, including Ira Jersey of Bloomberg Intelligence. If that's the case, how sustainable are some of the other rallies in risk assets?
Truncated market check this morning. Futures negative 12, Dow futures negative 83, the VIX 17.12. Not too much going on all in all with a 10-year 1.58%. John, I do have to go to the football before we bring in David Riley. And to me, the key line that I read ignorant over the weekend was this cynical project. Is English football, is European football nothing more than an asset bubble of these asset inflated times?
We were asking for a market call. I'm not going to give you one on that front, Tom, but you do raise a good question. I think ultimately they want to find more money, more sources of revenue after a really difficult 12 months. But this is a conclusion of 20 years of negotiations with UEFA, Tom. This has been the big argument. When we talk about a breakaway league and them leaving behind their domestic competitions, their proposal is different. Now, you can tell me that their proposal is disingenuous, but their proposal is ultimately, this is a challenge to the Champions League. We want to maintain participation in our domestic competition. This is a competition that will play out midweek in place of the Champions League, ran by UEFA. The pushback from the national leagues, the national organizations, the European organization is that you will not be able to participate in your domestic leagues if you go forward with this. So this is high stakes now. This is high stakes. Do the European big players, the likes of Manchester United, Barcelona, Real Madrid, Juve, do they have their bluff called if this is indeed a bluff? In years gone by, it's felt like one. This morning, I have to say, it feels a whole lot different.
And I think of minor league baseball, folks, here in America. You think of the movie The Natural, Robert Redford, iconic from years ago, filmed at Buffalo's minor league stadium. And it brings you up to the fabric of all this in Europe. We had to go out and find one of our guests. I think of John Riding in Preston North End, in love with the smaller leagues, the Champions League, I believe it's called, of the United Kingdom. David Riley joins of Blue Bay Asset Management. David, you're Watford FC. They're not in the Super League, are they?
No, they're a very long way from the Super League, and I suspect we'll never get an invite. But for true fans, it's your local club that matters. And Watford is, my family is long-standing club of support.
I mean, John, this is so important. I'll be honest, I love hearing you talk authentically to all these people across Europe and the United Kingdom of these lesser teams. How do they fare, John, away from Leicester and Everton and the ones we know? How do these smaller teams fare in this new calculus?
TV money is the ultimate issue here, Tom, and if the big players, the big teams aren't participating in the same competitions as the smaller clubs, you have to imagine the pool of TV money is going to be smaller. That will be the tragedy, Tom, that they'll lose out on a bigger pool of money, and ultimately these clubs will suffer even more so. That's the direction of travel here, and I think it's going to be really difficult for them. But the people who are virtue signalling this morning, and I've seen it so much from former football players, the virtue signalling around this issue, Tom, it's ridiculous. What do you think the Premier League was all about when they established that? That was always about the big teams trying to consolidate power as well. It was always about marketing. The same way we do that with the NFL. So, look, I'm skeptical of both sides of the debate right now. This has always been a business, has been a business for a long time. Yes, they serve the communities they represent. Yes, this is a sport that's born out of the working class in the United Kingdom and for England. But that's not what it is right now, and it's not what it has been for a long time. David, look, you and I could talk about this for a long time also, but people want to hear what you've got to say on this market. That rally we saw last week in the Treasury market off the back of higher than expected inflation, better than expected retail sales. What did you make of that, David?
Yeah, I actually think the rally is such that it's time to start thinking about trying to fade that and taking the other side. I mean, what I do think is, I think as you sort of said earlier, that, you know, a period of consolidation, we had moved a long way in a very short period of time in terms of higher treasury yields and also the way that the front end of the curve had moved as well. And I think what we learned from last week is that the sort of very strong growth and recovery in the United States, supported by the fiscal stimulus, is fully in the price. And I think for kind of rates to break meaningfully higher from here, we're back to the inflation discussion. And, you know, we're going to have to see kind of meaningful or you know, evidence that inflation is going to prove, higher inflation is going to prove stickier than is currently assumed. And I don't think we're going to see that for at least a couple of months. So I'm kind of expecting to be range bound, but I actually think, you know, as Treasury yields, you know, on the 10-year down at sort of 155, certainly if they hit 150, I think it pays to be on the other side of that, because I think they're going to end up above 2% by year end.
What about in Europe? Can you weigh in on the debate that we've been talking about all morning about whether European bond yields, in particular German 10-year notes, are going to go lower or higher, yields up or down?
I think the direction of travel is for yields to go higher in Europe because, you know, I think the curve is very flat within Europe. I think there's probably too much pessimism has been baked into the European story. That's starting to unwind now as we see an acceleration in the vaccines. But I think it's a little bit early to be sort of doing a victory lap on the outlook for Europe. There really aren't any inflation pressures under the bonnet in terms of Europe. It's still going to be a pretty difficult second quarter. And despite the acceleration of vaccine rollouts, we don't really know whether we're going to get a European summer season. And that does matter for a lot of countries, particularly in Southern Europe.
Couldn't agree more with that point. David, stay close. Just want to bring you some news and then get your reaction to something specific and important at the same time. Barclays was the lead underwriter on a Mooney deal to build 2 prisons in Alabama. They came under pressure from advocacy groups, and the headlines just crossed the Bloomberg that Barclays has pulled out of this Mooney bond deal to build those 2 Alabama prisons after that pressure from advocacy groups. The reason I want to come back to you, David, is you're in the credit market, and these ESG issues are clearly affecting the banks who are part of these deals, and they're going to affect people like you too, the investors that buy into these deals. It's no longer just about income. It's no longer just about a credit assessment. It's about what the money is going to be used for. David, how have you changed your approach in the last couple of years?
Yeah, I mean, I think you're right to highlight that, you know, ESG has become a very, very powerful theme. Our end investors who entrust us with their capital are demanding that we incorporate ESG into the investment process. It's something that we've done. We've integrated it very structurally. We have ESG analysts who are sitting with our portfolio managers, other analysts on our investment floor. So, I think the direction of travel is certainly there. And I think, what that story kind of highlights is some of the kind of judgments that have to be made. And I think you have to take sort of guidance to some extent from your end investors. But it's also clear that those companies with stronger and improving ESG scores or rankings are actually going to be rewarded in this market with a lower cost of capital, and those with more challenged ESG profiles are going to suffer. So I think even from an from a pure investment point of view, it's not something that you can ignore or dismiss as a fad.
Not anymore. David, it's good to catch up, sir. As always, David Riley, Bloomberg Asset Management Chief Investment Strategist. Would love your take on this, Tom. Just to reiterate this headline, to repeat it, Barclays was the lead underwriter on a Moody deal to build 2 prisons in Alabama. After pressure from advocacy groups, they have pulled out of that money bond deal, Tom.
There's a clear understanding, I believe, and we're not experts on this, but the experts are saying there's a desperate need to improve the prisons across any number of states, including Alabama. The question, I guess, is how you go about it, through a public direct advocacy or through a private company like Core Civic. That seems to be, John, the point. But what's really going on here, John, as we've seen over the last number of weeks, is a new social issue for C-class officers. Just showing up and going to work and looking at the financials doesn't get it done anymore.
Investors, for them as well, Lisa, the approach has got to change. It has got to change. You've got no choice now.
And it's interesting to see the bifurcation, frankly, between a number of different politicians who are perhaps sitting on the sidelines on certain issues and the corporate executives taking a stand, the sort of turning on its head of the common theme of the way things have worked. I've got to say, John, the political activism of C-suite executives since the pandemic has only been escalating.
And why? It's got to be about bottom line. I mean, forgive me for being so cynical, but if you didn't get the pushback from the consumer base, do you think you would have the activism that we're seeing right now at the top of these companies, Lisa?
No, I mean, you're cynical, but it's the absolute truth. And not only investors, but also consumers.
And to be clear, that's not a judgment on whether what they're doing is right or wrong. It's not for me to offer my view on that. It's just the motivation behind it. What is it really about? We've got to ask proper questions. Coming up, from New York City, much more still to come. Equity futures down 11 on the S&P 500. We pull back from all-time highs. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. In Minneapolis, closing arguments are set for today in the murder trial of Derek Chauvin. He's the white former police officer who's accused of killing a black man, George Floyd. The killing of another black man by police in a Minneapolis suburb has increased anxiety over the potential for violent protests. The CEO of video game retailer GameStop is stepping down. George Sherman is ending a tenure marked by a persistent slump and failed performance targets. GameStop's become a favorite of Reddit day traders this year, sending that stock soaring several-fold. But the company did miss both sales and profit estimates in the latest quarter. Coca-Cola reported first quarter sales that beat estimates. The beverage maker says it saw early signs of recovery in demand, especially in areas with higher rates of coronavirus vaccinations. Global unit case volume was flat. That showed that Coke has stabilized from the slump blamed on the pandemic. And Harley-Davidson reported better than expected first quarter profit. Plus, the company expects revenue at its motorcycle segment to grow faster than previously forecast. The numbers are good news for the Harley CEO, Jochen Zeitz, who's trying to turn the company around. In Russia, authorities decided to move opposition leader Alexei Navalny to a prison hospital. That's after allies warned that his health was failing. Plus, the U.S. threatened the Kremlin with unspecified consequences if he dies. Navalny has been on a hunger strike since the end of March. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Is there anything you think the Fed should be able to do to help people who are really suffering in the pandemic?
I think they need to be in the room with us as we make our decisions about monetary policy.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty. This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have communicated to the Russian government that what happens to Mr. Navalny in their custody is their responsibility, and they will be held accountable by the international community. In terms of the specific measures that we would undertake, we are looking at a variety of different costs that we would impose, and I'm not going to telegraph that publicly at this point, but we have communicated that there will be consequences if Mr. Navalny dies.
The foreign policy effort of the last week from this administration has been pretty pointed. That was Jake Sullivan, the National Security Advisor, speaking on CNN's State of the Union. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Monday morning, and here's your price action. We pull back from all-time highs on the S&P 500, down 10 points and off by 0.25%. Yields are in, now they're an inch higher, 158.35 on a US 10-year. And in the FX market, it's a dollar that's weaker, a euro that's stronger, euro dollar 120.33, up 0.4%. Cable with a 139 handle. And just to round out things for you, Juventus Football Club over in Milan, now up by more than 14%. Follow the money. Investors in these football clubs for this breakaway tournament, Tom, they like what they hear this morning.
Much more on that through the week as well. We say it's a European week. Well, it'll be a European week for the future of football as well. I should point out the coach of the Tots exits this morning. The news flow has been so extraordinary. John and I really barely touched on that. I can barely talk, John.
I know, you're struggling.
I'm struggling.
You know what I loved about that, Tom? How sincere you were when you delivered that news. The coach of the Tots has been let go.
Well, Mr. Levy called. I didn't have time to answer, but I'll get to it as I can. Right now, and I've been really anticipating, and thanks, Paris, for bringing him in. Eswar Prasad is with us. He is at Cornell. That barely describes the fact he is definitive on China with his tour of duty at the International Monetary Fund, his work at Brown in Chicago as well. We're thrilled that Professor Prasad could join us this morning. Eswar, I have all sorts of books on China right now. Stavridis and Ackerman's 2034, the book by Kishore Mahbubani, the book by George Magnus. And within all of this is amateurs like me oversimplifying, of getting things too simple. Give us one window into the complexities of this modern China.
So China certainly wants to drive the debate on a variety of issues on the multilateral front. China's hope before the COVID pandemic hit was to pitch itself as the great globalizer, in contrast to the previous administration, which was against multilateralism, which was against globalization. But now things are shifting. There is pushback against China, including from many of its close trading partners, such as Australia. And it looks like multilateralism is slowly making its way back into Washington. Whether the world is going to buy Washington's move towards multilateralism after what happened over the last 4 years remains to be seen. But certainly China is going to be a very important player in terms of driving the rules in international trade and finance. And whether the U.S. is going to try to fill the void that it left for the last few years is going to be the key power play for the next 3 or 4 years.
Professor, let's talk about where that void has been more pronounced in the last 5 years, and that's within the Asia region. There was a conversation just for a brief moment of time about the United States establishing some kind of partnership with Asian countries to have trade in the same way that maybe Europe does. At least that was a story for the future. Professor, then the previous administration left that behind. Do you see them re-establishing that down in D.C., an effort to put a stronger foothold within the region in Asia to attract those countries to deal with the United States in a way that they haven't been able to?
So as you correctly put it, Jonathan, there was a pivot towards Asia and then a pivot away from Asia and indeed from the rest of the world. And now I think we will see a more gradual pivot back towards Asia, because that's where a lot of the action is. And the Biden administration has made it clear, while it is willing to talk about multilateralism, it is going to take a tough line in particular against China. So on trade issues, the baseline of conflict that it came into with China, that is going to remain the baseline. So it's not going to go off the baseline. If anything, they're going to bring a larger set of issues into that discussion. And the recent discussion with the Japanese leadership, of course, points out that the U.S. is trying to strategically bring its allies around. Now, the problem for countries in Asia is whether they can really trust the U.S., because they did trust the U.S. earlier, even though they have very close relationships with China, both trade, financial, and political. And they're concerned now about whether they can really trust the U.S. to watch their back. So I think what the Biden administration does in terms of not just talk, but action in the next 2 or 3 years is going to be really crucial.
I want to dovetail this conversation with a book that you just wrote on digital currencies. The idea that China is launching a digital yuan. How much does a digital yuan give China an upper hand in economic dominance?
So the book is coming in September. I wish it was here already. It would have been a great time, but thank you for mentioning that. The digital yuan is something that is crucial for domestic purposes in China. I think the Chinese government is very concerned about Alipay and WeChat Pay dominating the payment space. They want an alternative. They want to keep retail central bank money relevant in China. But is this going to rival the dollar's dominance in any way? Not really. Most international payments are already digital, and ultimately what matters for a currency's role in international payments is how deep that country's financial markets are, how much investors trust it, especially trust its institutional framework, such as an independent central bank, an institutionalized system of checks and balances, and so on. China doesn't quite have that. So certainly the digital yuan, in addition to China's cross-border interbank payment system, which is the payment system that can talk with other countries' payment systems, will help the yuan become a more important international currency. But a larger reserve currency, that will take a lot more.
So we hope that when you come back, that book is published and we can have that conversation then. Eswar Prasad there, the Cornell University Senior Professor of Trade Policy, on the situation with China, the Asia region, and of course his upcoming publication later this year. Tom, here's a question for you from Jim Bianco of Bianco Research. You'll like this. Did the Tots fire Ted Lasso?
Yeah, well, Jim Bianco,
Did the Tots fire Ted Lasso?
He's on top of the story, and we went to our reporting out of Queen Victoria Street, and frankly, Lasso is shortlisted for the Spurs. I mean, there's a number of quality people.
You know, people tuning in this morning, Tom, won't know if we're joking or serious on this story. Ted Lasso,
John, you
enjoyed Ted Lasso,
John,
didn't you, Tom? I still haven't watched it.
Oh, please, it is outstanding.
Is that on Amazon?
It's on Disney. I think it's one of the successors.
On Disney
Apple
Plus?
TV.
Apple TV?
Apple TV. I think Apple did it. Yeah, Apple did it. And it's beautifully gentle. But John, there's so many jokes in it that I don't get. It's a lot like Little Britain when that was out years ago, where I just sort of know a third of the jokes. Plus, I can't keep up. They get going, John, with the accents. When the players particularly are talking, I can't understand them.
What accent is it?
I don't know. It's like Northern British, like, you know,
Northern
way up
British.
north where you
It's a
live.
classic, that one.
Thank
Northern
you.
British, where I'm from.
I'm getting hate mail this morning.
Look at those markets.
Is it Everton or Everton?
It's Everton.
Is it
Everton? I just don't correct you sometimes because I enjoy it.
Well, I don't know if it's.
Yeah, he just got the mute button on him, if everyone wants to know. We're having a
Lisa
technical
hit mute.
malfunction.
Lisa
Why are
hit
you using the
this
mute
morning.
button on me, John?
Lisa's not happy. I can tell you that. Coming up, Michael Schall,
having a
Market
great
Field
time.
Asset Management
Everton.
CEO. Everton.
Leicester. Thank you. Leicester. Everton.
Spurs.
Newcastle.
That Northern British accent, eh, Tom? What's that about?
You know, like Watford, way north.
Euro dollar on 2034. Tom, that joke's closer to the truth than you realise. Yields 158.35.
No clue.
Anything north of Watford.
Farthest north I've been is Claridge's.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
From New York City for our audience worldwide, it's a softer morning this Monday morning. In the equity market, we decline On the S&P 500, down 10 points. On the Nasdaq, we're down around about 0.4%. On the Russell, off by 0.9% after 4 straight weeks of gains on the S&P 500. It's a small pullback. Let's switch up the board and get to the bond market. I can't speak. 2s, 10s, 30s.
It won't matter this today.
158.52.
I mean, I'm crushed by Jose out
every
the door.
time I've
and
spoken, I wish I could restart this segment. Tom just screaming, go to cash, go to cash. Tell us about the football thing. Your yield's on a 10-year in the bond market, 158.52 on a 30, 227.33. This is what I actually wanted to talk about. If you'll indulge me and give me another 30 seconds. You will? Thank you. In your final board, in the European bond market, here's your year-to-date gains on an Italian 10-year yield, on a German 10-year yield, up 20 basis points, on an Italian yield to around about 63 basis points right now, up by about 34 basis points on a German 10-year yield right now. So negative 23 basis points year-to-date. Over in Germany, we've seen the move, and now there's this conversation about how far we can push this. Yields pushing higher, maybe towards zero. So that's the story out of the bond market, Tom. Should we get back to that football story?
I was going to delay it. I mean, folks, that's what we do here on Surveillance. This is so important. What you have to understand, folks, is Lisa, John, and I really don't know where we're going, and we've always done that on Surveillance.
That's not news.
Back 20 years. That's not news. But right now, I was going to do a straight conversation with Michael Scholl, Market Field Asset Management, and follow up with football. We're going to flip that on its heads because Mr. Diamond is in the Super League transaction. John Farrow, I want you to bring Michael Scholl and of Manchester United, but what is the significance, John, of the American financier blowing up European football?
So, Tom, as you know, right now, I'm not at the Bloomberg terminal, and you need to tell me the headline, and then I'll react to it.
JP Morgan, guys, can we
Let's
get one of those big banner screens?
Go on, Tom.
JP Morgan bets $4.8 billion US on Super League as clubs sign binding deal.
We talked about this in a previous ad, didn't we? JP Morgan underwriting this effort, and I think, Tom, that's why this is different this time around. This has been a threat for the last 20 years, and this feels so much more real this morning because the financing is lined up. The companies are ready to go, and I think that's the difference right now, Tom.
Well, it's going to be simple. We're going to get John and his entourage back to his podium here so we can continue the discussion. Again, JP Morgan financing this transaction. We are thrilled. And Michael Scholl joins us right now with Market Field Asset Management. Of course, his great affection for one of those Super League teams, Manchester United. Michael, I want you to bring this into the arc of this asset boom that we're in. Is the super leaguing of English football, of European football, just another symbol of the global financialization of these times?
I mean, the short answer is yes. I mean, the commercialization of sport, has accelerated over the last 20 years. And I think that the COVID period, has I think crystallized the needs of the largest clubs to make sure that that they can continue to increase their share of whatever revenue is available. As for JP Morgan, I'll point out that JP Morgan was the bank that financed the leveraged buyout of Manchester United back in 2005.
Yeah.
Which was a transaction that nobody actually thought could get done. So JP Morgan has had a hand in the commercialization of English football, back to that period of time. And, I would look at that LBO of Man United as one of the sort of key moments which have got us to this, sad story today.
Michael, we've been familiar with this conversation now for the best part of 2 decades, and I think this feels very different. As I read through these headlines again, that JP Morgan is underwriting this, but the clubs themselves have signed to a binding deal that was key to JP Morgan's backing, and that's according to our sources, Michael. So this isn't just a threat anymore, is it? This feels real.
It does feel real. I mean, it's possible that some kind of political intervention will make it harder. I mean, you could have a windfall tax put on the clubs or something of that nature, and I'm sure any binding agreement has some sort of force majeure clause within it. But no, I think this is a genuine attempt to recast who owns sport, and this is somewhat. It's a more radical version of the Premier League itself, which was an attempt of the larger clubs to take control of English football away from the league. In this case, it would be European clubs taking control of the sport away from UEFA, which is the European League. But no, this feels like a definite attempt to change things. It is possible that this particular proposal, gets diverted, but it will only get diverted by another massive shift of revenue and control towards the largest clubs within Europe, and this change is coming.
Well, Michael, let's talk about what could jeopardize this just briefly. There has been a push from the domestic leagues to say that if you go ahead and do this, you won't be able to participate in the domestic competition. But I think the bigger threat is a threat that hangs over the players that participate in this, which is from FIFA, that could mean that these players wouldn't participate in the international game anymore and represent their country. Now, Michael, as you look through sports, can you think of a precedent here before and whether that is an effective stick to stop this from happening?
It did happen in cricket. Cricket's a very, very different game. It was not heavily commercialized in the 1970s, and an Australian TV mogul, Kerry Packer, did create his own, better paid, Australian cricket league, and did get some of the best global players to play in that league. And for a period of time, they did not play Test cricket. Now, that lasted a few years. Was fairly successful. Some players didn't join the league, and stayed playing international cricket. Some players did, and everything merged together again. But I think at this point in time, the players themselves are so much more commercialized, and the agents themselves are big businesses, within themselves. And my guess is that there's been a lot of behind-the-scenes conversations about this. So I think that most of the best players would prioritize playing in the best club football over international football. I don't think it's universal, but I think enough of them would, that all that would happen if you banned them from the international game is the international game itself would become, something of a backwater, and you'd end up with two-tier sport, domestic sport, club together with international sport, and then above it, this sort of super pan-European league, which really would be, garnering the best TV slots, the best ratings, the best sponsorship, and that's what the world would look like.
Well, Michael, let's pick up on the TV slots point. I'm really looking forward to hearing from Paul Sweeney a little bit later on this morning to see what he's got to say about where this leaves the broadcasters, Tom, who have signed multi-year contracts with some of these broadcasting issues. In the leagues like the Premier League in the UK, for that matter, over in Spain too. I know recently one was just signed for Serie A over in Italy. Now, you telling me those broadcasters will stick to those deals or won't try and come back again and say, hold on a minute, if you've not got Manchester United, if you've not got Real Madrid playing, you've not got Barcelona playing, what am I paying for?
We'll have to see, and we welcome all of you on radio and television. This historic moment where an American bank, J.P. Morgan, will finance the changing of English football and, of course, all of European football as well. Lisa?
Yeah, well, this is the question here, the idea of U.S. banks moving into financing European football. Is this an investment opportunity? Is this a rejiggering of the entire financing of the major European sport? Michael, what's your view on that in terms of European sports as a potential investment opportunity and U.S. banks having an increasingly heavy hand in financing it?
The story of football has been that as revenues increase, the sort of, so much of the money ends up leaving the game to players, and agents. So, I think this would be, similar to what's happened when the value of TV rights has exploded. Yes, the clubs generate more revenue. They end up spending it greatly on player compensation, agent compensation, and transfer fees, which is a European football phenomenon. Do some of the sort of super clubs manage to continue to sort of increase their value? Yes, probably. But I don't think, I think that at the end of the day, European clubs probably close the gap on between their values and the values of the largest American franchises. But it wouldn't make European football more valuable than, say, the NFL or the NBA. I think I think that it would simply close the gap between one and the other.
Juventus right now over in trading over in Milan are up by around about 15%. So this market likes what it hears. And Tom, I think the real tragedy of this, if there is one, for many people, is what happens to the smaller clubs. The smaller teams that get left behind in all of this and don't get to compete, or at least even try to get access to compete in Europe's largest sport on Europe's biggest stage?
Well, this is important. Michael Scholl, again, Stephen from Hong Kong emails in and says, you haven't mentioned West Ham. Michael Scholl, I believe West Ham is not a Super League team. I mean, how do we keep West Ham and the others motivated to be part of elite football?
I mean, you can't in that situation. You can create a second-tier competition. The English game used to be more unified until the Premier League came along. You know, I think, as they say, it just becomes, as I say, it does become a two-tier. You know, it does become a two-tier sport. You know, I think there would be enough interest outside of this Super League to maintain something below it, but it would be, you know, it would be second tier. And retaining young players would be much more, you know, difficult. So, as I say, I don't think you'd see the elimination of this second tier, but it would be a much drearier, less hopeful place. Funnily enough, on a sort of day-to-day basis, it can still be enjoyable. But, you know, there's a sadness to it that, you know, at the moment, any club over a period of time with the right financing and the right management can theoretically become a very successful club at the highest level.
Michael, fantastic to get you on the program to get your thoughts on this. Just a really important change for the world's biggest sport. Michael Scholl there, Market Field Asset Management CEO.
That was wonderful.
So,
wonderful,
Tom,
John.
the reporting through this morning suggesting that JP Morgan was the bank underwriting this effort. I think our reporting right now, the important aspect of it is that the clubs have signed a binding agreement to commit to the league.
Yes, yes.
That doesn't sound like a threat to me. That sounds like the real deal.
Well, moving forward here, and there'll be a response from UEFA, FIFA.
UEFA.
You've got it.
FIFA.
It sounded so authentic for the last 3 hours, Tom. And now you're letting it slip.
Everton.
Really?
Everton.
That's sarcasm, everyone.
Steve Major emails in. Thank you for mentioning West Ham.
West
Good
Ham
morning,
is the
Mr.
number one
Major.
club in London right now. Coming up on the Open, Jared Wood of Bank of America Securities Research Investment Committee Head. Looking forward to catching up with him a little bit later in the next hour. Thank you for tolerating Tom, and thank you for indulging me. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden wants to prove to the world this week that the U.S. has rejoined the fight against climate change. He'll promise cuts in greenhouse gas emissions that are both ambitious but achievable. But after policy reversals and years of inaction, the U.S. will have a wide credibility gap to overcome. An international climate summit begins this Thursday. A case at the U.S. Supreme Court today will pit the Biden administration against Democratic lawmakers and progressive allies. The administration will defend the government's policy of blocking permanent residency applications from thousands of immigrants who've been living legally in the U.S. for years. It involves the Temporary Protected Status Program for immigrants from countries in crisis. A new poll out today says half of New York voters think Andrew Cuomo should remain as governor despite multiple scandals. Still, an overwhelming majority of those polled by Siena College don't think the Democrat should run for re-election next year. Cuomo's approval rating in the poll has sunk to its lowest point since he took office back in 2011. Shares of Peloton lower pre-market. U.S. regulators warning consumers to stop using the company's treadmill if there are young children or pets at home. The Consumer Product Safety Commission is investigating incidents of injury or death related to the machine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I would be very surprised, Margaret, if we don't have a resumption in some form by Friday. A decision almost certainly will be made by Friday. I don't really anticipate that they're going to want to stretch it out a bit longer.
Dr. Fauci with Margaret Brennan on Face the Nation. Of course, Face the Nation, you can hear it hugely successful for us on Bloomberg Radio Sunday afternoons, all the Sunday programs. It's just been a great and wonderful, enduring success for Bloomberg. There, Face the Nation and Dr. Fauci. Right now, not only the conversation of the day for us on vaccination and COVID, but this is the most serious conversation as all of us attend the end of a pandemic. Ofer Levy is with Boston's Children's Hospital that barely describes his assertive work in pediatrics and in vaccinations and precision vaccinations for children. He is an FDA advisory panel member as well. Dr. Levy, thank you so much for joining us now. Is it safe now for an 8-year-old to get the first shot and then the second shot?
Thank you for that. Look, we are blessed here in the United States to have 3 vaccines under emergency use authorization. The J&J is on pause. However, the youngest age group that can currently receive any of these vaccines are 16-year-old for the Pfizer product. At the moment, nobody under the age of 16 years is eligible to receive a vaccine. There are ongoing clinical trials to assess safety and efficacy of the coronavirus vaccines in those younger than 16 years of age. And to my view, as a pediatrician, that's very important.
Well, of my time of, say, Leninger, biochem, and all that, it comes up to this medical phrase, titer, T-I-T-E-R, or maybe it's simply the dosage allowed. Do we just assume it's the same vaccine for children, just a smaller dosage for little people?
No, kids are not just little adults. From the day we're born to the day we die, the only constant thing in life is change. And our immune system is no different. When you look at a baby all the way through an elderly individual, the immune system keeps evolving. So we cannot assume that a vaccine that's safe and effective in one age group is safe and effective in another age group. And often dose may be different, and immunogenicity, the ability of a vaccine to induce protective antibodies, could be different.
Well, how much higher is the bar in terms of side effects for children, given the fact that they don't present with the same degree of illness on average?
Thank you for that. We view it as very important to remember the future, our children, when considering this pandemic. And there are multiple reasons to want to have vaccines against COVID for kids. Although it's uncommon, severe COVID does occur in children in the form of a multi-system inflammatory syndrome in children, or MIS-C. Children do become infected and they excrete the virus, and they could infect parents or teachers or other children. And because childhood infection is often asymptomatic, other precautions won't suffice. And, you know, the majority of vaccines in the world are given to kids. The majority of the global vaccine market is a pediatric market, and the infrastructure to deliver vaccines across the world is by and large a pediatric infrastructure. So if you want to get a high percentage of a population immunized around the globe for any infection, pediatric immunization is often the path. And so we view this as a very important component of the fight against this pandemic.
Well, I want to dovetail this conversation with the J&J issue, and this is a delicate topic, but the idea that the J&J vaccine was paused in its distribution because of 6 known cases of this rare thrombosis out of 7 million inoculations given. Is the bar that much higher for unusual developments, even if they are marginal and very rare, when you're inoculating a population that is not as at risk? And I'm thinking about a possible recommendation by the FDA by Friday that perhaps the J&J vaccine can go to people who are older than the age of 50, but not younger.
Well, you know, vaccines are something that you give to healthy people, so they've got to be safe. And so there is a very big emphasis on safety, and that continues even after an authorization. Even after an authorization and you scale the vaccine and you're pushing it out to the population, there are passive and active systems to monitor surveillance for safety. And if there is a signal, even if it's a small and rare signal, as was the case with the J&J, it needs to be pursued. So although the pause is awkward, in my view, it's the right decision. And in the long run, that will lead to confidence in the public that the federal authorities are taking safety seriously. And of course, when you're developing a vaccine product for kids, safety will come first. And that's why there are rigorous clinical trials now that are double-blinded, placebo-controlled, prospective studies to assess safety and efficacy. And when the sponsors, such as Pfizer, believe they have the right data to indicate that, they will submit to FDA, and FDA may convene the advisory committee to look at those data. And as you know, those briefing documents are made publicly available to any American, so we have a very good and transparent process.
Dr. Levy, thank you so much. Ofer Levy with us, too short a visit. We look forward to another conversation soon. He's with Boston Children's Hospital, their precision vaccine program. Lisa, what an eventful day. I mean, we spent way too much on this English football thing. There's J.P. Morgan in with a note. But, you know, I'm sorry, we still got the shock and awe here of price up, yield down over the last 10 or so days.
Yeah, although today you are seeing a bit of a stabilization in the bond market. There is a question, though, going forward. It does feel like we're at an inflection point. People are exhausted. They're going on vacations, their first vacation since the pandemic. They're actually getting on airplanes again. And there's a resetting. How much can inflation pick up? What does that mean for the bond market? And how much does that affect risk appetite? And there really is a complete disagreement on Wall Street on this point, Tom.
Yeah, I go back to the simplistic thing we started at 3 hours ago, which is wage dynamics. And I need to see wage inflation of some type, a lift in salary and benefits. And, you know, I just Michael Spence, the laureate, I thought was brilliant on it. With monopsony out there, are we going to see it? No.
And the note from the White House today, the idea that they're talking about how we may see wage deflation, and this is because of the averages. Just because of the average and the way that the data was collected, a lot of lower wage workers exited the workforce in mass last year, a year ago. So what you got was an increase in the average wages. That reverses. We could see a decline in the average overall. How you message that going forward,
John
Tom?
from Coventry emails in. He says, Tom, you did a worser job than Lisa. on Football Talk today.
Did he really?
Yeah, I did.
Aw.
I did a worse job than
You know, in fairness, I didn't really try. So therefore, at least you try. You put your hat in the ring, you know, and your tots are still going to be in that Super League. So, you know.
Well, there's a vacancy there, and seriously, I think Ted Lasso is on the short list. He's American with a
this is a joke
few other
for
votes.
everyone
Votes
who's
is,
listening.
well, what are you watching this week, Lisa, in economic data and bond data? Look at the bond offering from Morgan Stanley.
Well, the banks have been selling a lot of debt right now,
Yeah.
and they've been flooding the market. People think to raise capital due to the tightening in certain restrictions. Basically, they can't use their treasury holdings. You can't exempt them from their capital requirements, and so they're raising money instead.
You just get it. So they're all going back to the trough, as they say as well. On politics this morning, former senior advisor to President Obama, Valerie Jarrett. Look for that on Bloomberg. Futures at -8, Dow futures at -50. The VIX still well under 20, 17.13. And yes, Bitcoin in the vicinity of 57,000. This is Bloomberg Radio and Television.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It is a football-free zone from New York City for our audience worldwide. Good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell with equity futures pulling back from record highs. We're down 0.2%. We begin with the big issue. Investors desensitized by a series of all-time highs.
Equity markets can continue to move higher. The equity market will continue to rally.
This market's going to go a lot higher.
Equity markets are a discounting machine.
Priced for tremendous growth.
The recovery undoubtedly is just rock solid.
We've seen, clearly a really robust recovery.
Complacency getting a little extreme.
Look at the equity markets. You take a look at valuations there.
The valuations may seem a bit frothy today.
Just when you think things are frothy, they get frothier.
Some of the indices are at all-time highs.
We are still very constructive on risk.
It just keeps coming.
It is a great market to be in.
The Fed continues to double down on its no rate hikes till mid-2023 or even later than that.
The Fed has the punch bowl out, and everyone's drinking from it.
It's hard to know what we're missing.
Let's bring in the Bloomberg team, Kaylee Lyons and Michael McKee. Morning, Kaylee.
Good morning, John. Well, of course, we are fresh off of a record high to close out the week on Friday, closing out the fourth straight week of gains for the S&P 500. That is the longest weekly winning streak since all the way back in August. And sure, futures are a touch softer this morning, but we're still trading around 41.68, well above the average analyst year-end target for the index, and it's only April 19th. And the notable thing about this rally, John, is that it has been broad. More than 3/4 of the members in the S&P rose last week, and 131 of the stocks in the index are at 52-week highs. That is the most since going all the way back to January of 2018. And when I say this rally has broadened out, what I really mean is it isn't just the cyclicals and value plays leading anymore. In fact, actually what has been leading over the last month is growth. The S&P 500 growth index up about 10% over the period. Its value counterpart by less than 4%. And the market-weighted S&P 500 is outperforming the equal-weighted one. So that reflation trade has started to slow down, that rotation reversing a bit. And of course, we're seeing that reflation slowdown evident in the bond market as well. After the worst quarter since 1980, the bid has started to come back into treasuries. Over the last 2 weeks, the 10-year yield has fallen around 15 basis points to sub 1.6%, even in the face of upside surprise after upside surprise on the economic data. It looks like a case of a lot of that good news already being priced in. And with that, what we're left with is an everything rally, John.
Kaylee, very much so. Last week, the story for me, the bond market, a series of upside surprises, inflation on the Tuesday, retail sales on the Thursday, and yields lower Tuesday, lower Thursday. Michael McKee has more on this. Mike, is the bar getting high enough for what we can expect for the year ahead?
It's starting to get there, John, certainly. There was a semi-famous book about the recovery from the 2001 recession called Flying on One Engine. If Tom Keene were to rewrite that today, it would be flying on two engines. Here you can see one of them. The United States, we know about that. You saw the numbers Friday. The U.S. is booming. Retail sales, manufacturing, powered by fiscal stimulus. The Atlanta Fed GDP Now forecast index over 8% for the first quarter. Bloomberg Economics revising their numbers up this morning to 7%. We already know March unemployment was at 6.2%, so I looked at next month, a 5.6%, dropped to 5.6%. Obviously, investors love those numbers. Now, the missing engine this time around is Europe. Right now, the forecast for growth in all of the major economies there are for contraction except for in France, and it barely grows. The Eurozone down 2.2% in the first quarter, according to the Bloomberg Economic Survey. Unemployment remaining high everywhere, and the chance of a recession over the next 12 months still 30%, according to that survey, which is why we have good news. The other economic engine is China. China growing much faster than anticipated, much faster than people thought they would. 18.3% growth in the first quarter, driven by a 34% increase in retail sales, a 25% increase in fixed asset investment. Critics say China relies too much on investment rather than retail sales, but with the numbers they're getting right now, everybody will take it.
Just to be clear here, Mike, we're referring to Tom Keene's book as semi-famous.
Semi-famous.
Semi-famous. Does Tom know this? Is he aware that we're calling it that?
We'll have to drop by and tell him.
You can go tell him first.
Yeah.
Michael McKee, thank you, sir. Outside of the story with the economy, I want to touch on the FX market briefly. Dollar weakness, a story this morning against G10. Euro firmer by about 0.4% now. Euro dollar reclaiming that 120 handle. Cable doing nicely, up 0.9%, approaching 140 on sterling against the US dollar. That's the FX market. Let's turn back to the equity story. Crossmark's Victoria Fernandez expecting stocks to overcome valuation concerns concerned. She writes the following: although some of the technicals show sentiment could be getting a little stretched, we still feel there's some runway for markets throughout the year. Victoria, I'm pleased to say, joins us now. Victoria, as you point out, and correctly so, 12 months ago, we overestimated the duration of the downturn, then we underestimated how quickly we would snap back. Now, I wonder if we're doing that again.
Yeah, I think there's an element to that, Jonathan, because we are looking at some of the technicals that say we're getting maybe a little overheated, right? Whether it's the RSI hitting that 50 level, that overbought level, whether you're looking at the bull-bear ratio or the bullish sentiment, those are hitting cycle highs. So there are some warning signs that perhaps things are getting a little overheated, but you have to take a step back and look and say, wait a minute, we're on our third stimulus package, which is supporting the economy. We've got savings rates that are extremely high right now for the consumer. So even though, like Mike mentioned, we had really strong retail sales numbers that came out last week, the savings rate, most of that stimulus check money went into savings. So the consumer is set up for 2-3 quarters down the road to continue to be strong. We've got a strong housing market. We've got supply chains that are being fixed. And we have CapEx over the next 6 months that are expectations are up over 30%. So there's a reason that the sentiment is really high. So could we have some consolidation, some pullback in the short term? Yes. But I do think, like all the clips showed at the beginning of your show, I think the equity markets do have room to run for the rest of the year.
Victoria, you made 2 points there, savings and capex. Let me pick up on the savings point just quickly. Jared Woodard of Bank of America will join us later this hour. He's pushing back against the idea that much of that is going to get spent this year, just relatively speaking to the consensus view at the moment. What gives you an indication of if and how this money will get spent?
Yeah, so if you look at credit card transactions, we look at the last week of March, credit card transactions were up almost 30% over the last 12 months, over that time period. So you're looking to say, wait, hold on. Yes, the stimulus checks are there and people are spending it as it's needed for some families that really need the emergency money. But the rest of those families, we're seeing the savings rate continue to grow. What does that tell us? It tells us that they're waiting. They're waiting for the economy to open up. They're waiting for international travel. They're waiting for concerts to come back into play, and then they're going to spend that money. So for us, we see people looking forward, looking 2-3 quarters down the road for the opportunity to spend that money, and it's sitting there in savings waiting for that to happen.
It's a conversation about discretionary spending, and I think we're already seeing that in the market. You'd acknowledge that, Victoria. Airlines, the index on the S&P of 28% year to date. It's the infrastructure CapEx side of the story that I think is a bit more nuanced, Victoria. Where is that showing up? Where do you think it should show up? And what gives you confidence that it's not already fully priced?
Yeah, I'm not sure it's fully priced because if you look at the CapEx expectations that we've seen in some of the surveys lately, I mean, I know it was really high for the Empire and for the Philly Fed when those numbers came out over the last couple weeks. But before that, CapEx numbers were not high. Companies were still really uncertain as to what they wanted to do and how they were going to spend those funds. But now we're starting to see the numbers move higher. So it seems to me like it's more of a recent phenomenon that these CapEx numbers are starting to grow, that the confidence is back with corporations to do that. Maybe we'll hear more of it with the earnings calls that we're going to have. But I think they're going to spend that money on some of these areas like their IT infrastructure, maybe not as much in the R&D component that a lot of people were looking at, but more in building out some of their internal infrastructures. That's where we should see some CapEx.
Let's take it one step further then. This start of the CapEx cycle, this CapEx spending story, Victoria, you mentioned the IT side of things. Is that how you want to play it? Is that the most efficient, the optimal way of expressing that view?
That's how we're going to play it across market, how we've been playing it. So you look at some of the names that we think and some of the areas that we think are going to do best going forward. It's going to be in that data infrastructure. It's going to be in that 5G space. It's going to be in internet plays. So names like NVIDIA, names like Adobe. These are names that we've been investing in recently. This is where we think the growth potential is going to be, especially if you look and see that we have this chip shortage that's been affecting automobile makers and possibly going into some of the big tech names in the near future. But we do think that's where the focus is going to be for corporations as more and more people work remotely. NVIDIA,
as you know, up more than 20%, had a great year. It's a great pick, Victoria. The challenge for so many people is they see those gains. The difficult part of this sometimes is just staying with it. It's working, stay with it. How do you stay with it?
So when we look at a name that we're going to put in the portfolio, as you know, Jonathan, we're not short-term players in the market. We're longer-term players, right? So we want a business that has visible growth. They have to have solid business models. They have to have low net debt on their balance sheets. NVIDIA works in that space. And yes, they're in gaming. They're in data centers. We think there's a lot of growth in automation. They get 40% of their revenue from chips, right? And we know there's that shortage there. And that's going to be an issue for a little while. So we think there's some runway there. And look, they came out last week and they're looking to even beat their expectations on revenue growth that they had put out previously. And I think we're going to see that from some other companies in this space as well. So I think you have to dig down and do the fundamentals. And maybe you wait till you have a little bit of a pullback that we're talking about in the market to jump in. But we think there's long-term potential there.
Victoria, it's good to have you with us. You're sticking with us. Bloomberg's Abigail Dillittle has the price action in this market going into the opening about 20 minutes away. Morning, Abby.
Good morning, John. And sticking with NVIDIA, shares are down today along with Tesla. You have some of these mega caps taking a decline. NVIDIA on the fact that a UK official is intervening in the company's proposed acquisition of ARM Limited. So the stock, as you can see, is down 2.3%. The UK official citing a national security grounds around the intervention around this $40 billion acquisition. So the stock cooling off. And Tesla, of course, that mystery crash in Texas where there was nobody driving the car. 2 people, unfortunately, sadly, were killed. It's unclear whether the car was under autopilot. It is still under investigation. As for some more wild moves, Bitcoin, of course, over the weekend, the crypto space under lots of pressure. Bitcoin right now is actually higher, but the crypto name's still under pressure. And the question still remains, is Coinbase, that massive direct listing last week, is that some sort of at least near-term sell the news moment? It appears to be the case right now. Let's see whether there's more follow-through. Bitcoin technically does look like some more weakness could be ahead, having crossed that 50-day moving average. And then finally, sticking with the theme of a wild ride, but to the upside, GameStop is absolutely soaring on the news that CEO George Sherman is leaving before the end of July. The company, of course, struggling to reverse declining sales and miss profits. Sort of awkward, John, when a stock soars on its CEO leaving.
Very much so. Awkward for the CEO. That's at least the story this morning. Abby, thank you. Coming up, US vaccinations clearing another milestone as global infections hit another weekly record. That conversation coming up next with Clear Harbour's Aaron Kennan and Crossmark's Victoria Fernandez. From New York City this morning, good morning. 18 minutes away from the opening bell in a beautiful New York City. Futures in 10. We're down about 0.25%, 41.66 on the S&P 500. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our 2 main hubs, but across the region.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
decision almost certainly will be made by Friday. I don't really anticipate that they're going to want to stretch it out a bit longer. My estimate is that we will continue to use it in some form. I doubt very seriously if they just cancel it. I don't think that's going to happen.
Dr. Fauci there expecting a decision on the J&J vaccine this coming Friday. His comments coming as all Americans 18 and older are eligible for a shot today. The US making progress but still falling behind Israel and the UK in terms of the percent of the population vaccinated. Bloomberg's Kelly Lyons joining us now with more. Hey, Kaylee.
Hey, John. Well, of course, the U.S. may be third in terms of percentage of population vaccinated, but of all of the doses given around the world, the U.S. makes up about a quarter of them. 209 million inoculations given to this point. The CD saying half of U.S. adults have now received a shot. Now, the average inoculation rate is up to 3.2 million per day. At that pace, it will take another 3 months to cover 75% of the population. And, of course, the pause in the J&J vaccine has thrown a bit of a wrench into that effort, but the White House still says they should have enough of the two-dose Pfizer and Moderna vaccines to meet demand by May. And of course, John, this remains a case of the vaccination effort being in a race against the virus, because when you look across the world, the virus is still winning. The global COVID cases hitting a record in the past 7 days, topping 5.2 million worldwide, with a 12% increase in cases from a week earlier. And that is really being led by outbreaks in countries that are more ill-equipped to cope. 19 countries that Bloomberg tracks reported record cases last week, one of them being Canada. The other 18 are in emerging markets. And just one country, India, is responsible for more than a quarter of the gains of the spike in new weekly cases. Public health officials there are worrying about a new variant with a so-called double mutation that is thought to be fueling a deadlier wave of cases. So the worsening crisis in India, John, is really just a solemn reminder that this pandemic is far from over.
Kelly Lyons, thank you very much. I misspoke just moments ago. Not falling behind, just still behind some of the numbers from the likes of Israel, though quickly catching up at the rate we're delivering here in America at the moment. Kelly, thank you. Let's bring in the panel, shall we? Aaron Kennan of Clear Harbor, still with us. Crossmarks, Victoria Fernandez. Victoria, a massive effort has taken place in America. Now we're looking for sources of upside surprises and many people looking towards Europe. Is that the right place to look?
Well, when you look at the numbers that Kaylee was just mentioning, and so you have the UK doing really well, Israel, you have the US. We know China has already past that, and their recovery is really strong right now. So you have to look to the Eurozone to determine what the path is going to be going forward. I think some of the issues we've seen is reflected in the dollar here in the U.S. I do think as the Eurozone starts to do better and they start to see vaccinations come online and they start to reopen again, they get people traveling back there, they get the retail sales coming back. I do think it's going to be a positive, and we're looking for that to happen maybe around mid to late summer.
Aaron, I'm looking at some of the numbers coming out of the European forecasters. Euro dollar 125 over at Goldman maybe over the next 3 months. Right now through 120. BNP Paribas Manulife talking up a positive yield on a German 10-year. Aaron, if we had a positive yield on a German 10-year, what does the US bond market look like off the back of that?
Well, it still looks quite attractive on a relative basis, John, and I think that the European story is one of delay with the vaccine rollout, and we certainly are expecting brighter news going forward. But time is of the essence, because there's also sort of a political paradigm that could come to play here with German elections coming up and the rise of populism. So if you have an upset and angry populist and you have a vaccine rollout that's been less than effective, you could have results that could translate into different fiscal policies, different economic policies going forward, which could be a headwind to markets. But certainly looking at the European markets this year, they've kept pace with the U.S. markets for sure. And clearly people are looking through this period of uncertainty.
What do you think is being discounted now, Aaron, just in terms of the improvement in Europe? And the question I'm asking really is whether expectations have peaked in the United States and we're starting to readjust in Europe now, and whether that's going to be the story for the next several months.
Yeah, it's a great question. While we all saw 10-year Treasury yields peak on March 31st at 1.74%, they're just below 1.6% this morning. And so there's been a narrative out there that, we may have seen, peak growth here in the U.S. and now it's Europe's turn. We still think there's a lot of fuel left in the European recovery story, that the sector rotation will most likely be a part of that story. I mean, we're going to have a huge vehicular miles driven number this summer. It has huge consequences for distillate demand, for global oil demand, and those repercussions have yet to play out yet in the recovery story here in the U.S. In Europe, we think it's delayed. We're not too concerned. We certainly, mourn the fact that we are not accelerating as we have in the U.S. and the Eurozone on the vaccine front, but we still think within the next 2 to 3 months, the economic data is going to improve. The banking data has already been showing up in Europe as quite strong, net the Archegos fiasco with Credit Suisse.
What hasn't been priced, I guess, is what we've got to ask, Victoria, because as Aaron indicated, we've already seen a big rally in European equities. We've had 7 straight weeks of gains on a stock 600. European banks, ex-Credit Suisse, as Aaron points out again, have done pretty well year to date as well. So how do you express these trades? I hear these narratives so much. How do you express them?
Yeah, I mean, it's a difficult question because you do have to base everything on your expectations of what you think is going to happen. And it has been such a roller coaster in Europe in regards to the vaccination rollout, in regards to the reopening. We've seen countries start to reopen and then they put the restrictions back in place. So I think it's a difficult call to make on a sector rotation. As you know, we don't like to chase the market and we don't like to do those sector rotations, the cyclical rotations that we've been seeing. So I don't think you want to play it that way. I think you do want to take a little bit of a longer term perspective. The same way that we're doing with our U.S. domestic-based portfolios, you do the same thing there. You look at the things that are going to be longer-term positives coming out of COVID in Europe, and that's where you want to play your space. I think, again, it comes back to some of the IT names. I don't think you put all of your eggs in the basket of a retail reopening trade, because I think there could be some tricky moments as Europe starts to reopen just based on what we've seen over the past 12 months.
I want to turn back to the cycle call, which I think is probably the most difficult thing to do right now, Aaron. It's make a cycle call and what the cycle looks like, the shape of it, the trajectory, the duration. Last 10 years, it was clear it was shallow and long. This time around, there's a real debate about what that looks like, short and hot or the same again.
Yeah, well, it's really interesting. I mean, the market is sort of bullish for those who believe in the cyclical recovery, John. And it's also sort of bullish for those who believe in the more secular reversion to the sort of pre-pandemic mean. And what I mean by that is, if rates are lower and growth prevails, well, that's the story that will prevail. But if we continue to see sort of this cyclical recovery through 2022, obviously the sectors that have been bolstered this year, energy, materials, industrials, and banks, will probably perform reasonably well. But I will note, rates peaked on March 31st. And if you look at the sector rotation in the United States, which sectors perform best, it's back to the growth story. It's back to the growth story. Technology, communications, and consumer discretionary have outperformed that cyclical rotation that everyone's talking about.
Aaron, I love catching up with you, mate. It's good to catch up again this morning. Aaron Cannon there and Victoria Fernandez. Victoria, thank you. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And later, the Bitcoin roller coaster returning after a weekend of volatility. That conversation still ahead with Bank of America's Jared Woodard and Barry Knapp of Ironsides. From New York, this is Bloomberg.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Five minutes away from the opening bell in New York City. Equity futures doing okay. We're down 10. We're off by 0.25%. 4 straight weeks of gains. We pulled back just a little bit this Monday morning from all-time highs at 41.66. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up on Citi, upgrading First Solar to a buy with a $100 price target. The analyst highlighting a number of near-term catalysts stemming from changes in U.S. tax and trade policy. That stock is up by more than 3%. Your second call from Credit Suisse, upgrading Textron to outperform, street high $72 price target. The analyst citing a more constructive outlook for the company's business jet segment. We're up more than 1.8% there. Your third call from the team at Susquehanna, downgrading Qualcomm to neutral, 155 price target. The analyst expecting headwinds stemming from the stock's valuation and increasing competition from the likes of Apple. We're down there by about 1.5%. Up next on the program, the Bitcoin frenzy returning following a weekend of surging volatility. That conversation up next with Bank of America's Jared Woodard and Barry Knapp of Ironsides. Your opening bell is just around the corner this Monday morning. Good morning to you all. Beautiful one in New York. Equities down 10. We're down 0.2%. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
25 seconds away from the opening bell in New York City. Record high after record high over the last week or so. On the S&P 500, futures are down around about 10 points. On the S&P, we declined by 0.2%. On a Russell, we're off by 0.4%. On the Nasdaq, we're off by 0.5%. There's your opening bell. A bit of a fist pump. Over where's that? On the NYSE. Seem excited, don't they? Switch up the board in the bond market. We look like this on a 10-year yield. Yields up 3 basis points, back through 160 on a 10-year to 160.64. In the FX market, positive 0.4%. On the euro dollar 120.27, reclaiming a 120 handle, going into the ECB decision this coming Thursday. Crude holding on to a 63 handle at $63 and around about 25 cents. That's the cross-asset story this Monday at a market desk with your movers. Here's Abby.
John, let's revisit why we are off those record highs, because we do have two very large growth momentum names down, one of them being Tesla. Sadly, that Texas tragedy where 2 people were killed by a car where they believe that there was no driver. It's unclear whether it was autopilot, still under investigation, investors not liking it. And NVIDIA is down 1.9% after a UK official is intervening in their $40 billion acquisition of ARM, citing national security concerns. As for some big movers, we have the shares of Harley-Davidson absolutely soaring. They put up a huge beat, profits of $1.68, 89% better than expected, on sales of 1.42% or 1.42 billion, with 12.4% better than expected. It seems that folks really want to get back out on motorcycles. The outlook is very strong as well. Coca-Cola put up a strong quarter, saying that areas where the vaccine is out are really stronger for them. Knoll and Herman Miller, an acquisition happening there. Herman Miller buying Knoll, the office furniture and supply company, for $1.8 billion. And Knoll, you can see, is absolutely soaring here on that news. Herman Miller, not so much, as typically happens for the acquisition. And then finally, rounding it out with some of the Bitcoin and blockchain movers. Bitcoin, wow, what a wild move, and once again down 9% earlier. It had been trying to fluctuate higher. Technically, Bitcoin looks set to keep going lower, and that appears right now, John, to be taking some of those Bitcoin movers down, including Coinbase, which of course had direct listing last week. Perhaps a sell the news moment.
Abigail, thank you. Let's build on this. A weekend of volatility for crypto and crypto assets. Bloomberg's Kelly Lyons has more. Hey, Kelly.
Hey, John, volatility in the crypto space. Literally, what else is new? This is a famously volatile asset, and once again, that has been on full display over the past several days. On Sunday, falling as much as 15% intraday on Bitcoin. It closed yesterday 7.5% lower, and we are recovering just a bit of that today, but just a bit. Right now, we're trading around $56,000. And the big question, John, is why? What was the driver of those dramatic moves? Is it regulatory fears with the Turkish central bank cracking down? Is it power outages in China that affected mining, or is it just a case of an asset that got really, really overheated? It is likely a combination of all of those factors. But at the end of the day, this move lower really has just been a blip in the grand scheme of things. Bitcoin is still up more than 700% over the last year, and even that rally is dwarfed by the rally in another cryptocurrency, Ethereum, which is up more like 1,300% in just the last 12 months. Ethereum now actually the second most valuable coin in terms of market cap, coming in at around $257 billion. But of course, Bitcoin still the dominant player in the game. Its market value topping $1 trillion. And John, I just have to note Dogecoin as well. It's a token that really started off as a joke originally, and yet a $50 billion market cap. Not bad for a joke coin, John.
Not bad at all. I came into work, first thing security said to me this morning, seriously, walked through security this morning, did you buy Dogecoin? And I asked the security guard what he was up, and he said he'd made $1,000. Now, you do that with what you want to do, but like just walked through this morning and it came up and I was half asleep and I was surprised. So there we are. That's part of the conversation this morning for everybody, it seems. Joining me now is Bank of America's Jared Woodard and Barry Knapp of Insights Macroeconomics. Now, Barry, I know that you will be annoyed with me. I'm going to first come to you and ask you for your opinion on the European Super League Football League breakaway. So by all means, sir, you have the floor. Give me your take and then we can move on.
Yeah, I mean, it's fascinating. I think it was inevitable that these big clubs were going to want to not spend their time playing little sides from Slovenia and all. So it was inevitable. But for me, the bigger question is, can you teach Tom the difference between Liverpool, Manchester, Newcastle, or the one that I always found incomprehensible on the pitch, the Scottish accent, because that's not English at all, but Northern nonetheless.
Barry, I'm going to stay out of trouble on all of those points. And the one thing I'm trying to teach Tom at the moment is the difference between Everton and Everton. One is a place no one knows, and the other is a football club. Jared, I know you don't want to touch on this, so we won't. We'll go back to the crypto story. You can tell me to go away, and I'm looking for a narrative that does not exist, but SPACs suffering, cryptocurrency, crypto assets now over the last week suffering as well, retail volume, call options, all of that put together. Jared, what's going on here?
Yeah, John, hey, I don't want to talk about Dogecoin either, but, you know, I think the big story tied all together is that there's been a huge rise in these big market unknowns, was what we call them, whether it's retail frenzy or the SPAC frenzy or the crypto frenzy. People have got some money. They could put it to work in the real economy. They could buy things. Right now, they're buying financial things, unusual financial things. And I think this is coming, if not totally to a top, near to a top. I mean, you've seen the top in SPACs. You've seen, you know, something like a 20 to 30% drawdown in, you know, one index of the largest SPACs. That's why we've been so cautious on it in the last few months. Is the equity issuance in some crypto-related companies going to be the top in the Bitcoin market? I'm not sure, but I think there's reasons to be cautious there too.
Jared, earlier on in the program, Victoria Fernandez at Crossmark brought up the savings rate in America as a data point to be bullish. To be bullish because it'll get pared down and that money will get spent. I just noticed from you, Jared, you're pushing back just a little bit. Why is that?
I mean, there's a few reasons. I think the big conclusion from us with regards to this excess cash, and it is a lot of excess cash on household balance sheets, but I mean, there's two things to think about. And the first one, I just want to keep it simple. There's one number that I think everyone needs to know, which is 10%. That's the share of stimulus, according to our economists, and looking at, you know, almost real-time Bank of America card data, showing what consumers around the United States are doing with their stimulus checks. And the third round of stimulus has actually had the lowest spending response so far. Just 10% of those funds, you know, have been likely to be consumed. So what people are doing with the rest, whether they're saving it in cash or paying down their debts, you know, catching up on their rent, you know, building up their own balance sheets against future risk, or buying financial assets, you know, they're certainly not going out and spending in the real economy in the way that the inflation uber bulls had thought that they would. So I think that those fears about, you know, runaway inflation and all the hedges you need to put on are totally misplaced as far as data so far. And I think it's also worth pointing out that, you know, from the start of last year through the most recent data from the Federal Reserve, we saw that the top 20% of households saw an increase of about $1.5 trillion in their cash. The rest of the economy, the other 80%, saw an increase of only 0.7 trillion, so less than half. And we already know that the people, you know, at the top tend to spend, you know, much less of new income. It's the folks, you know, closer toward the middle and the bottom that tend to spend more. That tells us that all this excess cash people are talking about is largely, very likely, you know, to stay exactly where it is.
Barry, does that resonate with you?
It does, but here's how I would think about what's going on in Bitcoin and crypto more generally. If you go back to the beginning of January 5th, which ushered in the blue wave down in Georgia, you saw a serious steepening of the 2s/30s real rate curve. And the reason that's so important is the 30-year part of the curve dominated the move higher. The Fed is operating, their average purchase is 6 years. This is the first time in nearly 4 decades in the market where I saw the markets reprice heavy Treasury supply. So through that whole process where the market was coming to grips with the fact that the government had borrowed $5.3 billion and was going to spend it, that curve was moving going much steeper, and Bitcoin was rallying very strongly through that whole period. This is the digital gold concept, right? I've drawn analogs back to the 1960s. It stalled out and was in a range until the Coinbase hype last week, pushed it through the range, but it wasn't destined to go higher because this whole 2s/30s curve has completely stalled out. We had the curious Treasury market rally last week when we got super strong data, because it's never been about data, right? It's been about government deficit finance spending. So I wasn't shocked to see it run into, you know, a problem over the course of the weekend. There's a whole, you know, China controls the technology story that guys like Peter Thiel have talked about a little bit. But it really is not, I don't see it breaking out to another new level as the digital gold concept until the Biden administration regains their momentum on spending. They've definitely had a lot of pushback on the jobs plan. You know, think tanks, tax policy think tanks all pushed back and said it's going to raise less revenues. impair growth by crowding out private sector investment. So for me, that's the real thing that'll get crypto going again, is this, profligate government spending.
So Barry, to make it really simple and shorter for you, sir, you think we've seen peak fiscal?
Yeah, I don't think so. I mean, I think that they will be successful in spending at least, $2 to $3 trillion more. That'll come later in the year, and when that happens, these concerns will come back, and then you'll see that, like I said, that real rate curve will start to steepen out. We could have high velocity moves higher in Treasury yields, and the digital gold piece will get going again.
Are you looking to position ahead of that?
Well, I'm in all the reflation trades. I mean,
You're staying with it, Barry.
This is my idea: is you stay with the reflation trades, your market weight on tech, your overweight materials, energy, industrials, and all the little peripheral reflation trades as well. So,
Jared, your view?
On trades or on crypto?
On those trades.
On trades, I think that you've got to be looking at some unexpected winners from infrastructure. It's not materials, it's not defense from R&D. It's not any of the big headline names that people were talking about 3 or 6 months ago. There's a lot of unusual winners. Things, like actually tech is going to be a big winner, especially hardware. Industrial automation, not old school industrial, but the kind of new productivity enhancements. Real estate, industrial real estate and REITs have vacancy rates near record lows. We do have a CapEx build out. I think you're going to see real estate be a big winner, even healthcare services, things that people weren't thinking about, because basically the Biden plan hasn't been constructed in any of the ways that people were thinking about.
So, Jared, do me a favor, stay close, because you and I should continue talking about that. That's interesting. Barry Knapp, you've told me everything I need to know already. You're always interested, sir. It's good to hear from you. Barry Knapp and Jared Woodard, thank you. Let's get back to the market desk and get you some movers with Abby. Hey, Abby.
Hi there, John. Well, we do remain slightly off record highs. One stock that is pushing some of the index lower, Peloton shares are down after that tragedy where a 4-year-old child was killed by being dragged under the Peloton. And of course, we have the government regulators warning around using Peloton. The company's pushing back and saying it's not entirely accurate, but the government warning folks to not have kids and pets around their Peloton. Manchester, however, and this is for you, John, is soaring up 7.6%. This, of course, is JP Morgan is betting that $4.8 billion on the Super League. And then turning around to electric vehicles and some of the movements there, Tesla, of course, is lower, down 3.9% after 2 people were killed tragically in Texas in a Tesla that appeared to have nobody driving. It's not clear whether it was on autopilot, still under investigation, but that is taking the space down with it, John.
Abby, thank you. You mentioned Manchester United. Juventus over in Italy rallying as well. And the interesting part of this story this morning, from our reporting here at Bloomberg, JP Morgan's involvement was reported through much of this morning, but the team also reporting here at Bloomberg that the clubs have actually signed a binding agreement to commit to the league. And that's new information this morning, because for many people over the weekend, they felt like this would be another one of those threats, many of which we've seen over the last 20 years. But our reporting here indicating from sources familiar with the matter, that the clubs are said to have signed a binding agreement to commit to that breakaway league. Coming up, President Biden planning to meet bipartisan lawmakers on Capitol Hill, preparing another push for his Americans' Jobs Plan. That conversation up next with Bank of America's Jared Woodard from New York. This is Bloomberg.
Is there anything you think the Fed should be able to do to help people who are really suffering in the pandemic?
I think they need to be in the room with us as we make our decisions about monetary policy.
know that Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
We've all agreed for a long time that we need to invest more in American infrastructure. We just disagree about how to pay for it.
Well, in the interest of bipartisanship, I'll agree that Senator Coons is half right. There is a core infrastructure bill that we could pass with appropriate pay-fors like roads and bridges and even reaching out to broadband. That's the part we could agree on. So let's do it and leave the rest for another day and another fight.
Senators from both sides of the aisle floating a slimmed-down infrastructure plan, with Texas Senator John Cornyn opening the door for a GOP compromise. This coming ahead of President Biden's bipartisan meeting with lawmakers to push his $2.3 trillion plan. For more, let's bring in Bloomberg's Emily Wilkins. Morning, Emily. The latest, please, what the talks this week look like.
So it's an interesting thing when we look at these talks that President Biden is going to have today with lawmakers, exactly who he's chosen. It's a bipartisan group. It's the Senate. It's the House. It's a couple names that you might be surprised by. But the interesting thing is that everyone on this list is either a former governor or a former mayor. And this really goes back to President Biden's plan to make sure that he is appealing to local leaders and sort of the White House's new definition of bipartisanship, where they're calling things bipartisan if Republican voters and local Republican officials support them, even if they don't have any Republican support in D.C. So I think that's an interesting note when you think of who Biden's meeting with today. And then later this week, he's also going to meet with several Democratic groups of lawmakers, including one of the biggest Democratic groups in the House, as well as a group of more conservative Democrats.
Emily, before you go, can you just build on the compositional issues, the big pushback right now? Where is it within this proposal?
Well, I think there's a big question, and this gets to Senator Cornyn's remarks on Senator Coons being half right. The question is exactly how this bill is going to move. Is it going to be one giant package that includes infrastructure, human infrastructure, and taxes, and that's all going to go through budget reconciliation and be passed by Democrats? Are they going to wind up breaking it down to one bipartisan infrastructure bill, and then Democrats will pass their other priorities on their own? We don't really know at this point. There are conflicting viewpoints about what needs to be done. There is definitely the door open here to do some sort of bipartisanship on infrastructure. That's roads, that's bridges, that's sort of your classic transportation items. But Democrats definitely want more, and we have already heard from President Biden that they're not going to let Republican pressure keep them from going for as much as they can.
Emily Wilkins, the latest down in D.C. Emily, thank you. Bank of America's Jared Woodard joining us now. For a little bit more, Jared, you touched on the infrastructure spending issue, and I think there's a nuance here, an important one, that you just touched on. I want you to build on it even more so. Where are you looking and why?
We're looking at the unexpected winners from the plan as it's been presented so far. And I just want to say, John, before getting into the details on that, there's this moment in these discussions that always comes up where people say, well, we all agree that X and Y and Z are priorities, but we're so worried about the pay-fors. And I think this is a sign of sort of fundamentally unserious negotiating position, because we didn't have to talk about pay-fors when we were doing COVID stimulus last year under the last administration. We didn't talk about pay-fors doing the 1.9 trillion earlier this year under a new administration. And everyone agrees, at least on paper, that there's a lot of things that do need doing. Why do we have to start talking about pay-fors now? I mean, these all have massive multiplier effects. They're very positive for economic growth. And, we found there's a paper from Larry Summers, of all people, showing that U.S. Debt relative to future GDP, the sort of full productive capacity of the country, is at some of the lowest levels of the last 20 years. So I think that this pay-for discussion is basically just a rhetorical ploy. It's not a serious position. And if you take that on board, then you realize that there's quite a lot we can do. Unfortunately, the Biden plan, focuses a lot of effort and money on things that are really not expected. The big winners that people were expecting from infrastructure, things like materials, the big build out of construction and transportation, our analysts didn't see the Biden plan as a reason to upgrade those companies at all. The other big winner you would expect, a big surge in research and development. Biden spoke a lot about the need to catch up to China, because I think I mentioned it with you, John, last time, that the money allocated to R&D is a big disappointment relative to what China spends. And so we don't see any reason to look for upside in defense or aerospace, likely winners on R&D, under normal plans. Where we do see upside are the other kind of unexpected build-outs. I mentioned, real estate. Industrial REITs have vacancy rates near record lows. And so if you do see a CapEx surge in coming quarters, which we do expect, industrial real estate could do well. Engineering and construction could do well. There's nothing like this sort of green technology boom to give sort of full employment program to lawyers and environmental consultants. And we would also expect, semiconductors and tech hardware to do really well, because everybody on both sides of the aisle understands the need for more CapEx, more investment in semiconductors and technologies of the future.
Did I see healthcare in the mix as well in that list that you put out, Jared?
Well, you did. I mean, because the Democrats are making this argument that healthcare is infrastructure. I think they're being ironic, but I mean, it's a huge part of the plan. A lot of spending for care, in-home care for elderly people in healthcare. It's essential, arguably. Whether it's infrastructure, I don't know, but it's certainly a big part of the money they plan to spend. And so you've got to look at investments in that sector.
Jared, fascinating list, important conversation. Jared Woodard of Bank of America. In its equity market, all-time highs, all-time highs. Got so used to this story, still in and around record highs with your price action at a sector level. Here's Abby.
John, not much happening sector-wise this morning. If we go into the Bloomberg terminal and take a look at what is happening, it will look bearish, but really small moves. So we have the S&P 500 down just slightly. Energy is the top sector, so one of the up sectors, up about 0.9%. Communication services behind it. Utilities, consumer discretionary on bottom. Again, it feels like traders are jockeying for position. Let's watch how the day goes, John. And on the year, that's the bigger story. Energy, financials, materials, that reflation, reopening trade, and communication services in the mix as well, John.
Energy absolutely flying this year. Unreal. How many times have we said that? Abby, thank you. Coming up, the market moving events you need to be watching. That'll be next in our trading diary. This week is a big week for Europe. From New York City, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
About 25 minutes into the session, equities down about 6 points on the S&P. We declined a little more than 1/10%. A no drama Monday morning for the equity market. The Russell down by 0.4. The Nasdaq off by a little more than 1/10%. There's the price action. Here's your trading diary. What you need to be watching this week: President Biden meeting with bipartisan lawmakers discussing the American jobs plan. That would take place at around about 1:15 Eastern time. Then we get earnings from Johnson & Johnson and Netflix on Tuesday. President Biden discussing the current state of vaccinations this coming Wednesday. And an ECB rate decision and Christine Lagarde news conference coming up on Thursday. In between, you'll get some PMIs from America and, of course, from Europe too. Existing home sales and initial jobless claims in the United States this coming Thursday, I believe. To round out the week, a little bit more American data from New York City this morning. Good morning. This was the countdown to the open. Continue the conversation on Twitter at Faro TV. For our audience worldwide, getting back to work, this is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's